Good morning, ladies and gentlemen. Let's start this briefing session of the 6th Greek Investment Forum in New York. First of all, I would like to thank the Minister of Economy and Development that honored us this year by participating in this forum, and of course, the Ambassador of United States in Greece, who is also supporting very heavily this event this year, and I thank him very much. And for sure, the sponsors of this event that every year are supporting the presence of the Greek capital markets in US, starting from Alpha Finance, Axia Venture City, Eurobank, LXM, National Bank Securities, Piraeus Securities, Danaos, Deloitte, Karajas Partners, Red Smith, and Papapolitis. I would like to take some time here to give you a brief overview about the Greek capital markets. First of all, this year, 2017, the market outperforms. We have a return in our general index that climbs to the first, third position all over the world. And of course, this comes out of a very good performance of our listed stocks. The 25 participants, today 26 after the carve-out of PPC, of the large cap index are outperforming this year, all with positive return, and 16 of them, they have managed to cover the losses since the beginning of the fiscal crisis in 2010. Of course, many of them, as you can see, they have annual returns for the last 5 to 7 years that are more than 30% and 50%. On terms of liquidity, the market has a clear reaction by the finalization of the review, and as you can see, in the market we have doubled the trading value, although the trend in the global capital markets is it goes downwards with a decrease of on annually of 24%. The potentials of the Greek market, as I like to say, are clear if you compare the the ratio of market capitalization to GDP on average in Europe, which is the up line in the charts, to the similar figure in Greece. It is clear that there is a gap that has opened since 2008 by the beginning of the financial crisis, that it is the 1/4 now our ratio, but it is also clear in this chart that the slope of the specific index is starting this year to go upwards, trying to close this gap. And this is mainly based on the financials of the companies. As you can see from the financial accounts of 2016, it's clear that the EBITDA has been increased as an aggregate figure for all the listed companies at a level of 16%, and the net profits after tax, they have climbed at 66.4%. At the same time, we see the first year of increasing in the number of employees in the companies in the listed companies. On the same time, the trend of EBITDA, it is clear that it is going up since 2013, keeping the same pace and an aggregate 60% increase since then. And the debt ratios, especially debt to EBITDA, total debt to equity, are having a clear downwards slope. Finally, what we'd like to say, especially here in the US, is that our foreign investors' participation in our stock market remains sustainable over 60%, and it's growing step by step with the higher participation coming from the US investor, either directly, this figure is 18%, or indirectly through mainly London. I will close this short presentation about the Greek market by mentioning that by this year we have had the issuance of 4 corporate bonds through the stock market, especially the last 2 weeks, the issuance of 2 specific bonds of one listed and one non-listed company, and the oversubscription of those issues is a clear sign that there is an ability of our market for capital raising, which is the most important issue, I believe, that the Greek economy needs at this point of time. Thank you very much, and I will ask Simos, my colleague in this event, to continue the process.
Thank you, Socrates. Minister Papadimitriou, Ambassador Payet, ladies and gentlemen, good morning and welcome. We are very happy to be back in New York for the annual investment forum, more hopeful than ever because of the new opportunity in front of us. Following the successful review by our partners, Greece is now positioned to attract investment, to reach out to international businesses, and we hope to begin accessing financial markets. I must say that this is a notable achievement in which fiscal goals have been met, reforms have been legislated, and the real economy can begin to grow. We have supported reforms, and we are pleased to see progress in the labor market, in the investment framework, and in how the markets are reacting to Greece's progress. We support a more competitive economy, a more outward-oriented economy, and an economy that attracts FDIs, the pillar for growth and jobs. We also believe that it is time that Greece demonstrates it can exceed the conditions of the memoranda, and this was clearly shown recently when the primary surplus for 2016 was shown to be 4.2%, what the European Commission has called a massive overachievement, by far over the expected figure of 0.5%. I am confident that Greece will emerge strong, and I would like to emphasize that Greece has suffered from a public sector crisis. Its private sector has always been dynamic, and today the private sector in Greece has responded to the challenges, has reorganized by adopting lean approaches and by entering new markets. Today's private sector is vibrant, robust, and more competitive than ever, even under temporary constraints such as financing, for example. And let's not forget that most of all well-known multinational brands have a presence in Greece. Many are investing and reinvesting and are finding opportunities to generate new business. Philip Morris, for example, just announced a 300 million euro investment in Greece. The Kalamos Group returned with a €1 billion bid to acquire national insurance, and Deloitte will open a new international service center in Thessaloniki, offering 200 new jobs. I take all of this as a vote of confidence. In addition, Greece's new business landscape is being shaped by progressive forces in the private sector. And leading the charge are companies, many of which are members of the American Hellenic Chamber of Commerce, that have supported reform and change in the way we do business. And I believe this market catharsis is well underway and creates conditions for healthy and sustainable growth. And I want to add that my optimism is rooted in the fact that a new generation of Greeks is instilling a mindset that is based on meritocracy, competitive and healthy market forces, and the necessity for reform. Naturally, challenges remain, and this is why we are establishing a new National Competitiveness Council so that Greek companies across the spectrum can enjoy a better future. This is why, in cooperation with the Athens Stock Exchange and the participation of the Ministry of Development and the United States Embassy, we have extended our mission to include Washington this year, to showcase the opportunities Greece offers, to discuss the current changing environment in Greece with accuracy and precision, to to attract investors and to provide a platform for new business partnerships. And I would say that Greece offers massive investment and business opportunities. As a member of the European Union and the Eurozone, which following the last and final review in June should now be considered irreversible, Greece is highly attractive and has substantial advantages. I won't mention all of them, but I would like to say a few. Tourism visits have risen from 15 million to almost 30 million this year. So Greece continues to need resorts, hotels, residency villages, infrastructure projects, marinas, transportation, recreation, conferences, energy. Greece has become an energy hub in Southeast Europe with pipelines, CNG and LNG projects. ICT, the talent that Greece can offer to ICT partners is impressive. Our universities graduate science, engineering, and computer professionals of world-class caliber. Many companies, including Oracle, for instance, are taking advantage of this talent with expertise and R&D centers in Greece. Logistics. The Germans are heavily investing in logistics in Greece, and Greece is a fantastic center between Asia and Europe. Food and beverage, of course, health and wellness. And these are only some areas, because I must also mention the privatization program underway that offers the opportunity to investors to purchase state assets and turn them into highly viable investment vehicles. The American Hellenic Chamber of Commerce is committed to support the new landscape emerging in Greece. We are committed to support the progressive voices for change and reform and the new generation of Greeks who have begun to create the new future. And the Chamber is committed to passing on accurate perceptions about the country, that Greece is achieving success in fiscal consolidation, that proactive change is underway, and that investors will find massive opportunity. We thank you very much for being here with us today, for listening, and for supporting. Thank you very much.
Ladies and gentlemen, good morning. It's my great pleasure to be here today to address the annual Athens Exchange Conference for a second consecutive year. Among such distinguished speakers, I also wish to express my warm thanks to the organizers, Mr. Anastasopoulos and Mr. Lazaridis, for the invitation to this important event. As chairman of the Hellenic Capital Market Commission, my mission is the effective supervision of Greece's capital market and the creation of the regulatory conditions that promote private investment opportunities within a financially sound environment. Before elaborating on our ongoing efforts, I want to take this opportunity to share my optimism for the Greek economy. Economic figures for the first quarter of 2017 show clear signs of recovery across the board, including GDP, exports, private investment, and unemployment. But I'm sure that the upcoming speakers will give you more details on this topic. These positive developments are underpinned by Greece's key competitive advantages. These include an exceptional geographic location and climate, full participation across all EU structures, a modern and solid infrastructure that is in the process of being completed, and a significant improvement in labor market competitiveness with a highly skilled and specialized workforce. Last but not least, I want to highlight the gradual recovery of trust in the Greek economy following the completion of the second evaluation, which also includes a positive prospect for the restructuring of the Greek debt. With the aforementioned in mind, I can only conclude that the time is ripe for Greece to attract foreign investment. However, no economy is an isolated island, and we must keep in mind the global economic and political backdrop. the weak performance of the global economy and major political events, such as the UK's Brexit and the upcoming German elections, have adversely affected European economic performance and consequently Greece's as well. Against this backdrop, Greece's biggest economic challenge is the implementation of its new growth model based mainly on exports and foreign investment. Given that private consumer spending remains weak and that public investment is constrained by the obligations of the Economic Adjustment Program, the contribution of exports as well as large-scale investment are crucial for economic growth. Furthermore, with regard to the financing of the real economy, Greek banks still remain the major source of financing. However, it is not sufficient, and there are significant benefits to be had from achieving a better balance between the banking system and the financial markets as sources of funding for the economy. The benefits to the Hellenic financial system include more diverse funding sources. This would allow for a shift from debt funding to equity funding and in turn increase the overall competitiveness of the financial system. In this way, capital markets can perform an essential function in society. An increase in the financing of economic activities would result in more jobs and economic growth. It would also allow for Greek citizens to increase savings and investments. At the Hellenic Capital Market Commission, we are fully aware of our role as the regulator and trusted with the task of establishing sound conditions for the capital market. We also aim to enhance public confidence in the quality of supervision and market behavior. Supervision. With all this in mind, we have introduced a strong institutional framework for the establishment of alternative sources of financing. First and foremost, we have introduced the issuance of corporate bonds tradable on the Athens Exchange. This initiative has created an essential alternative channel for the distribution of liquidity directly from investors to sound productive enterprises. It is also worth noting that the EBRD is actively participating in the funding of Greek firms in recognition of the existing high yields and the good prospects of the Greek economy. We have also established a crowdfunding regime. This enables startups as well as existing small and medium-sized enterprises to seek funding. Both the corporate bond and crowdfunding initiatives are now in full swing, and we are already recording their positive results. In parallel, the Hellenic Capital Market Commission also introduced the authorization of fund managers in make use of the European passport under the scope of the Alternative Investment Fund Managers Directive. At the same time, our Commission actively follows the developments at a European and international level through its participation in ESMA and IOSCO. In this way, we contribute to capital market reforms in Europe and ensure that all reforms are introduced into the Greek legal framework in a timely manner. Special reference should also be made to the Commission's active involvement in the drafting of the law to incorporate MiFID II into Hellenic legislation. This is currently the EU's most significant development in this capital market regulation. The draft law has already been sent to the Ministry of Finance and is expected to be passed in Parliament by August 2017. In conclusion, I wish to assure you that the Hellenic Capital Market Commission will continue to fully support and promote all initiatives that foster economic growth for Greece. Our goal is to provide a sound and efficient capital market that offers great prospects within a modern and well-regulated framework that not only protects investors but also supports innovation. It is my belief and hope that 2017 and the years that follow will see our goals fulfilled and our expectations for progress exceeded for both the Greek economy and its people alike. Thank you very much for your attention.
Hello, my name is Penny Manis from CNN International. Can you hear me?
Yep.
Great, thank you very much. I've been at CNN for 22 years, but I'm still 30 years old, so don't do the math over there. I broke some child labor laws. I run business programming on CNN International, so I've covered Greece heavily for the past 2 decades, and I'm so honored to be with you guys today. It's really a pleasure. This is so much more fun than being in the CNN newsroom. I also have the great pleasure of introducing our 2 keynote speakers today. The distinguished Minister of Economy and Development of the Hellenic Republic, Dimitri Papadimitriou. Can you please join me on stage? Also, the Ambassador of the United States to the Hellenic Republic, Jeffrey Pyatt. Thank you both for being with us today. We're going to hear from both gentlemen today, one by one, and then I'll be able to ask them a few questions, and then we'll open it up to the audience a little bit. So please think about some tough questions you have for each of them. So we will start with you, Minister, if that's okay?
Sure.
Now that we figured this one out, let's not play.
Well, first of all, thank you very, very much for the introduction. I want to first thank the American Hellenic Chamber of Commerce, the Athens Exchanges Group, and especially Ambassador Pyatt for his enormous help and generosity of time. What we are gathered to do here today is to tell the story of Greece, a change in Greece. As you know, in the last 7 years has been a dramatic fiscal adjustment, significant fiscal consolidation, uneven structural reforms that have ended with significant difficulties such as unprecedented level of unemployment, a loss of output of more than 25%, an increase in poverty. But I think 2017 is going to be a different year. It's going to be a year of real growth. And I say this because if one is to take a look at the results of various economic indicators for the first quarter of 2017, we'll see that consistently they are on a positive trend. Whether you take the GDP growth, whether you take the gross capital formation, whether you take investments, exports, you take the business climate and the sentiment, the PMI is inching up to the magic number of 50, and many other indicators that in a way show that Greece has turned a corner. Some of the statistics were mentioned before, so I won't necessarily go through them again. One is significant is the tourism activity. This year is expected to be, as it was indicated, 30 million people, which is 3 times the population of Greece. It was mentioned that some key investments were made, primarily from the US. We have some Chinese investments as well. But I think that in a way confirmed that the estimated growth rate for this year of around 2%, I believe it will be higher than 2%, actually seem to be realistic, and they have been estimated, but not only by the Greek government, but by the EC, the ECB, and even the IMF. So I think that the name of the game is in more investments and more exports, because this is what it will deliver a robust growth in a robust economy. There are challenges ahead, and I think the government has taken up the mission of creating a growth strategy, which basically creates a different production model, a production model which is based on the labor force, 50% of which is university graduates, and can provide the opportunity for the production of goods and services that are of high value added and knowledge-based. This, of course, can be supported by the increase of the technological content in the goods and services. It can be supported with companies being reoriented towards production of tradable goods, and finally, the effective employment of the labor force. The second aspect of that growth strategy is basically to reorient the companies towards export production, goods towards export. The third is to operate companies within the framework of the EU competitive processes. And finally is to create, because of the 99 or 96% of our companies are SMEs, to create value chains and clusters so that they can compete effectively in the exports in the international markets, so that their small size is not an impediment. All in all, there is a strategy then in how to change the Greek economy around. There are certain targets. The targets that we have in order to fulfill this strategy is, of course, to pay attention to the unprecedented level of unemployment. We want to create 500,000 jobs in the intermediate run, which is three years. We want to basically able to meet the challenge of attracting foreign investments. And I will say a little bit that there are some challenges ahead in doing so. There's also to stabilize the financial system. It's also to provide opportunities for our people to have enough financing for their extension of their businesses, and also to create different kinds of businesses, such as startups and high technology. Now, these are ambitious goals, but I think can be achieved in the relevant time. It was mentioned about the successful completion of the review. As you know, the review was finished last week, the 15th of June, at some significant costs, broadening the tax base, and also, as it's been said, streamlining pensions. These are significant structural reforms that produce social inequalities. But nevertheless, I think there are other measures that in 2019 will be promulgated to offset those significant cuts. What is important in the review is that besides the disbursement of the 8.5 billion euro, which takes care of the payment of the maturing debt by the ECB and some interest payments to the IMF and others, it provides an opportunity of about 1.6 billion to clear arrears that the government has built up. The second aspect of it is create a roadmap for the fiscal balances from now to 2060. The third is makes the European institutions partners in the growth strategy of Greece by providing the capacity to develop a development bank, to provide opportunities for broadening the EU funding for more programs under the Juncker plan and other plans. Third, creates an opportunity to restructure the debt, and some of the details, I'm sure you have read them, so there's no need to go through them now. And finally, is to provide support to Greece to access the markets by providing a cash buffer to give the confidence to investors who will invest in the bonds that Greece will provide in the market. So all in all, I want to paint a good picture. I want to paint a picture that it is important and it's very good to invest in Greece. And why should you do that? Well, first of all, it is profitable. And if you take a look at our companies, you will see that most of them have returned to profitability. The second is the geostrategic location to Greece. It was mentioned as an energy hub, is other kinds of opportunities, tourism and so on. But more importantly, it is a political stability and a stability of that country in a turbulent region. And the final thing, of course, is the fact that one has the abundance of a labor force which is gifted, it's talented, and it is at very competitive compensation. The unit labor costs have dropped by more than 20% as opposed to the other countries in Europe that have been increased. And finally, there are physical resources that can be tapped. So I want to leave you with a message that we're ready to accept your investments. We will work with you. We have passed new legislation to make investments simpler. There's licensing simpler. To create businesses is simpler. There's a legislation that will take effect in August in settling the out-of-court loans, the non-performing loans, as well as other obligations of SMEs. And new legislation is about to be finished that deals with the startups because there's a significant activity in that area. And finally, for the creation of the development bank. So I will leave it at that, and I'm sure we'll answer the questions. Thank you very, very much.
Thank you so much, Minister, for outlining your vision during this critical time in Greece. Now we'll hear from the ambassador.
Well, thank you, Penny. First of all, let me say what an honor it is for me to be here in New York with the minister. Special thanks to Simos and Socrates, our partners at the Athens Stock Exchange and the Hellenic American Chamber of Commerce. A number of people have asked me, Ambassador, why are you in New York? Why aren't you back in Athens? What are you doing here? I am here as a reflection of the U.S. government's commitment to stand with Greece, to work with Greek companies, the Greek government, to ensure that this year, 2017, is the year that Greece finally emerges from this 7-year cycle of crisis and gets back on the track of sustainable economic growth. The United States has a strong strategic interest in Greece remaining, as the minister said, a pillar of stability in a complicated and geostrategically important region, that Greece remains as a member of the Eurozone, a strong democratic participant in the European Union. So we are going to work with as many levers as we have available to capitalize on this opportunity. I want to have as much time as possible for questions and answers, but I do want to amplify and perhaps elaborate a bit on a couple of the points that you've already heard this morning. First of all, I think from my standpoint is the significance of last week's Eurogroup decision. First of all, it is a vote of confidence by the European institutions and the IMF in the significant reform steps that the Greek government has taken recently and indeed over several years. Also very important, in my view, was the signal from Mr. Dijsselbloem that it is expected that 2018 will be the year when Greece emerges from fiscal supervision, stands on its own, returns to markets, and functions as a normal member of the Eurozone and a European economy. And I think that objective, those objectives are certainly within reach, especially when one considers the relatively benign external financial environment that Greece is going to face between now and 2019. That is to say, as the government gets through this summer and the relatively large redemptions which it will use this latest disbursement to cover, after that, Greece will have the opportunity to set a new narrative, to focus on investment, the way the Prime Minister has already begun to do. And the United States and the U.S. government wants to work with Greece in that capacity. A few other quick observations. First of all, I've also been in Washington for 3 days before coming here to New York, had extensive conversations at the White House, the State Department, and with many, many senior members of the U.S. Congress. I am impressed in those discussions by the consistency of focus on Greece and the continued strong U.S. commitment to support Greece through these difficult times. I was also very glad that the minister and I, and also some of the Greek companies that we had with us at the Select USA Summit in Washington, were able to spend some time with our new Secretary of Commerce, Wilbur Ross, somebody who knows quite a bit about Greece, but it was also clearly focused on this relationship. Also, I've been in Athens going on a year now, and I will say I've done a lot of travel across the length and breadth of Greece. One of the things that has really impressed me in those travels, and this was alluded to by the minister and also by Simos, is the extraordinary resilience of Greece's entrepreneurial sector. There is a whole story of the Greek startup scene, which is very little known outside of Greece, but I think is an important reflection of how the Greek economy has been changed by these 7 years of crisis. There are globally competitive companies, and you find them literally the length and breadth of the country, from Thessaloniki in the north to Heraklion on the island of Crete in the south, who are going to global markets with innovative products and are absolutely committed to an external focus, bringing to bear all the tools of the modern connected global economy. Last point, there's been, of course, a significant positive development over the past few weeks in terms of the U.S.-Greek investment picture, and that is the selection of Kalamos Investments as the preferred bidder for Greece's Ethniki Insurance, its national insurance company. This is a strategically important play by Kalamos. It is by far the largest American direct investment in Greece since the crisis began. And I hope very much that it will become a leading indicator for other American groups, in particular Greek American groups, taking a look at what the minister referred to as a changing Greece and identifying the opportunities that lie therein. There is a potential for significant additional progress in the months ahead. I'm very focused on what happens with the privatization picture. You have a number of large projects which are very close to being ready to go to markets, and if the government is able to reach consensus on moving ahead with those, I'm confident that you will see significant American players moving ahead in a number of other sectors. And lastly, and one of the reasons, again, I share the optimism that you've heard from the minister, from Simos, from Socrates, is the very strong focus that Prime Minister Tsipras has placed on foreign investment, and in particular U.S. investment. This is not perhaps what one would expect from the Syriza government in terms of where it began from ideologically, but the Prime Minister has sent a very clear message to the United States, publicly and privately, regarding the imperative of attracting foreign investment, and in particular the desire to see a stronger American presence. And that's something that I'm committed to working as hard on as I possibly can. So thank you.
Let me just see if this one works. No. Okay. We'll get this other mic hot perhaps for the Q&A if that's possible. Thank you very much, Ambassador, for your words. Now, because I'm a journalist, it's time for some tough questions, right? That we want to ask you. If I can start with the Ambassador and then I'll move to the Minister. Ambassador, you outlined many ways that the U.S. can support Greece during this time. You know, I did a little homework from Greeks. I said, what do you want to ask the Ambassador behind his back? Or, you know, in this case, in front of you. I want to ask you about debt relief. Debt relief is at the center of every Greek wish when it comes to this economic crisis. Will the U.S. support Greece in helping to obtain some form of debt relief, whether through the IMF or any other means?
So I'll make 2 points. First of all, it's been a long-standing U.S. government position that there needs to be debt relief in order to make the Greek debt burden sustainable. But in some ways, this is the wrong question. And as I alluded to, if you look at the Eurogroup decision of last week, one of the important implications of that decision is that debt redemption is something that Greece doesn't have to worry about now, at least until 2019. So there is time for this dialogue to continue between the European institutions, European governments, and the IMF about how to manage that issue. I am impressed also as I listen to key European governments, Greece's partners in the European Union. There is a growing recognition that this is an issue that has to be tackled one way or another. But from where I sit, when I look at the Greek macroeconomic picture, at the Greek investment picture, if you're focused on whether or not debt relief has been pushed through the German parliament, you're asking the wrong question, because that is not what is going to determine the quality of Greek economic growth in the months and years immediately ahead.
Thank you for that. Secondly, Greece has passed many tough measures through its parliament. I think it's very fair to say Greece has done a lot on its end through the past few years to meet what the creditors want. So from where you sit, as also an American living in Athens, what more can Greece do at this stage to win back the confidence of the markets and the investment community?
Well, I look forward to hearing the minister's answer to that question also. But I would say, in terms of what I hear, the number one request that I hear from investors, and in particular American investors, is predictability. Companies want to know that decisions that are made will be upheld. Companies want to know that the indications, for instance, from the Prime Minister or the Economy Minister or the Finance Minister or the Energy Minister regarding the intention to move ahead on Project X or privatization Y will not be overturned by some other branch of the government. And investors want to know that the tax picture will remain consistent, and on that basis they can run the numbers and make decisions. And I would reiterate the minister's point that Greece, in many ways, Greece is highly competitive right now in terms of pricing, in terms of the availability of human capital, in terms of the extraordinary natural resources. And the issue is how you build the policy environment around that, which allows private capital, and I hope significantly American capital, to make business decisions about how to leverage those various attributes.
Thank you. Yes, if it's something we've learned in the business world, it's investors do not like surprises, right? Thank you for that. Minister, the ECB is unlikely to include Greek bonds in its asset purchase program for the foreseeable future. Obviously, a prerequisite for that is to have a sustainable debt, at least as defined by the IMF. Is quantitative easing a major part of the solution for Greece? Could the country tap the bond markets without the support of the ECB, as Cyprus did, maybe even this year?
I was expecting this question. Let me just say that the quantitative easing, at least the qualification, the eligibility of our banks to tap the quantitative easing program of the ECB is important, but I do not believe it's a prerequisite to going to the markets. as it was pointed out in the completion of the second review, the European partners are interested in supporting Greece accessing the markets. The decision whether Greece should qualify for quantitative easing is an independent decision by an independent institution. And therefore, whether the DSA that they have developed will allow it, it's a different story. I do want to tell you that their DSA analysis is not the same as that of the IMF. It's certainly much more plausible. They haven't published it, but I happen to know about it. So, but all in all, I do not believe that quantitative easing is a prerequisite to go to the markets. As you can see, the spreads have been dropping dramatically. So Greece can conceivably go to the markets now, but since the spreads are dropping, you would go when it's necessary to do so.
Okay, thank you very much. You guys are giving me a lot to write about later today. The expectation is that we're getting into the last year of financial support for Greece. Is it realistic to expect Greece can exit the bailout on this timeline? How can you convince investors that we're on the right road in Greece, given growth, is getting better, but still slightly on the weak side? Unemployment hovers around 25%, and business and capital taxation is still a bit high.
Well, I share the view of the ambassador who indicated that Greece will exit, by using the words of Mr. Dijsselbloem, exiting the MOUs in 2018 and being able to stand on its own feet. All the indicators are showing that Greece is on the road to economic recovery, of normalization of a country that hasn't been normal for 7 years. And being that, there should be no reason why Greece should not be able to access the markets and therefore not need either another MOU or dependence on the EU. I wanted also to take the opportunity to answer the question that was posed by the ambassador in terms of what are the challenges. There are some challenges, and those are, we're focusing on. First of all is the modernization of the public administration. That's an important task, and we're at work, but it won't happen overnight. The second is to have a streamlining process of the judiciary. That's another problem. And new legislative acts are being promulgated that have to do with bankruptcy procedures and others. The third thing has to do with how you deal with issues of, as I indicated, of simplification of businesses. In other words, as you all know, the entire country of Greece is an archaeological site. So no matter where you dig, you will find something. So there is some streamlining there in the Ministry of Civilization, Civilization, Politismo, so that one can deal with those issues much more effectively and much faster. So we are at work. More changes are coming, but they won't happen overnight.
Okay, let's give this another try. Can you hear me? Okay, there we go. Third time's the charm. All right, well, we have a few minutes to take some questions. I hope you guys have had time to formulate a few. I would love to take a question right now from for the ambassador from this group.
I'm with Carre Metals. We export products from Greece now for 50 years. One of the things I'm sort of anxious about is when I hear, I wouldn't say horror stories, but pensions of people going down to 25% of what they were previously. I worry how people in Greece can survive and struggle to survive. And with this new program that this financing that you've received, and you mentioned social equality, how much of that money is going to help bring up the level of pension payments to the public? And also, what percentage is actually going to pay arrears and interest on previous debt?
You didn't mean to ask that question of the ambassador. I think you ended to ask me that question. So let me just say that it is clear that the sort of streamlining of pensions is a big problem. As you know, last year, the Prime Minister decided, along with the other ministers, to award a significant, if you like, amount to pensioners to make up some of the lost income that they had. We believe that this year's revenues will give us the opportunity to consider doing that again. But it doesn't really solve the problem, I understand that. There are other things that have been promulgated to take effect in 2019. I indicated that the new review has actually created some more austerity, but there are some offsets that will come to take in their place. But it is a problem which we are working at, to be able to create the opportunity for people to make up in different ways their lost pensions. The other question I think you asked, I'm not sure I remember it.
But it was what percentage of the money that you're receiving?
Yes, yes, I do. As I indicated, I think the 8.5 billion euro that it is the next tranche that will come, will give us 1.6 billion to be used against clearing of the arrears. The expectation is that next year we will do a similar thing so that we begin to eliminate the arrears question that has been going on for the last 3 years.
Thank you very much, Minister. I don't want Ambassador Pyatt to get jealous, so there's definitely got to be a question for him this time. I'll come over to you.
Hi. Hi there. I'm Bob Apfel, and I have an interest in democracy. Democracy was invented in Greece, and it was invented in a downtown part of ancient Athens, actually, that a few people in this room know probably, that John D. Rockefeller Jr. spent $900 million in today's money. At the same time that he was restoring colonial Williamsburg, he bought up 900 houses in the area where the Agora stands today. This was the place where democracy started. And he spent that money trying to uncover the root of this thing called democracy so he could share it with the world. Interestingly enough, we as a nation in the United States don't seem to enjoy democracy enough, or don't seem to appreciate it enough, to spend money to promote democracy through bringing it to the world where it was invented. Rockefeller did. He spent $900 million. Is there some way that perhaps the U.S. Now today can expand on the work of John D. Rockefeller, what he did in Williamsburg and what he did in downtown Athens starting in 1931? And secondly, is there some way that we can extend the availability of OPIC support? OPIC is the Overseas Private Investment Corporation that the U.S. uses to guarantee to our exporters that they'll be paid. We haven't in the past, in the prior administration, used it. In Greece, saying that Greece was part of the EU, it didn't need it. Some would argue that Greece is a little bit of an emerging nation and maybe needs a little bit of exception processing.
Good. Let me, those are two separate questions, so let me unpack them. On the question of OPIC, I will just say, first of all, this is an issue that hasn't really been dealt with by the Trump administration, but I was very impressed. I met with a number of members of the Hellenic Caucus in the U.S. House of Representatives yesterday, and several of them raised with me this specific question. So there is congressional interest on it. I'm confident that the administration will be hearing inquiries regarding how to get OPIC in business in Greece. The question I think I would put to all of you is that something which would contribute to investment activity? But that's for a separate and offline conversation. On the question of democracy, this is something I care passionately about. Over the course of my 30 years as an American diplomat, almost now, a great deal of my career has been spent focused on the challenge of how to build, consolidate, and strengthen transitional democracies. One of the great honors of being U.S. ambassador in Greece is indeed the fact that you live in the city that gave the world the concept of democratic governance, democratic accountability. I share the view that we all need to be very attentive as Americans and as global citizens to not taking our democratic rights for granted. I think that's one of the things that Greece teaches us. I think it is worthy of great admiration that Greece has managed through this 7-year economic crisis, a crisis that has produced a 25% fall in gross domestic product, a crisis that has produced unemployment that is up to 50% among youth and 25% overall unemployment, that nonetheless Greece's democratic institutions continue to function exquisitely. The press is free, elections are respected, democratic institutions are as strong as they are any place in Europe. So by no means would I take this for granted. I don't think anybody needs to give Greece lessons on democracy. I mean, Greeks are those who invented democracy, but I do think all of us as Americans need to be cognizant of the importance of preserving the strengthening of democratic cultures, democratic societies at the core of our foreign policy. And you can't have served, as I did for 3 years as U.S. ambassador in Ukraine, and seeing people literally risk everything they had for their democratic rights, without having great respect for the importance of preserving those institutions and practices.
Thank you very much, Ambassador. I think we're going to have to leave it there, unfortunately. Normally I would go to a commercial break, but this time it's a coffee break. Thank you so much to our keynote speakers and to the audience for your questions. Ambassador Payet, Minister Papadimitriou, thank you so much for your words and being keynote speakers.
Thank you.
Thanks to all of you. I enjoyed being with you.
Economist from Citi, Mr. Ebrahim Rabari, please.
Good to see you again.
The podium is yours.
Well, while you're getting seated, let me just thank you for having me today. It's a great pleasure to see so many people from Europe over here, and so many people with enthusiasm for Greece and for Europe, which is a relatively recent phenomenon. So my current role at Citi is I'm a managing director in our global economics group. But my background is in Europe, and I used to watch the European economy as my main preoccupation. I still pay a lot of attention to it. And one thing that I observe with a lot of satisfaction is the change in attitude and the change in enthusiasm that we're seeing towards Europe, even on this side of the Atlantic. And I think the change today relative to election day in the US, I think, was very dramatic. I think that was a moment where there was a lot of pessimism about European prospects in this new era, if you like, while today I think we can safely say that we see the most benign attitudes towards Europe that we have for years. And so what I wanted to do today is just give you a very, very quick and high-level overview over how we think about the Greek economy in the European context right now. Those of you who have interacted with us over the last few years, as we have been very keen observers of developments in Greece and have been quite cautious and quite concerned at times. And I think the message overall here is one of cautious optimism, that we are looking at a situation where I think some improvements are overdue, and we're somewhat confident that we're going to see them happen, even though unfortunately we don't necessarily see them happen as fast as we would like. Now, the big picture story is a familiar one that you've probably heard already a few times today, and that you're likely to hear even further. We've seen just a very dramatic macroeconomic adjustment. There was a need for a big adjustment, clearly coming out of the global financial crisis and its aftermath. But we have to acknowledge that the broad macro coordinates for a recovery are in play. Some of that, of course, is just a reflection of how severe the adjustment has been. You see the familiar GDP charts on the top left. But what has clearly been a big factor in that is that very dramatic fiscal adjustment, which is almost unprecedented certainly in a developed market context. And for all practical purposes, we would think is complete at this point in Greece. We would probably agree with those that say maybe it's gone a little bit beyond what was required. Now, at the level of, if you like, the economic function of the economy, there were also very important adjustments on the external side, but then we have seen clearly an adjustment in the labor market that has been part of the macroeconomic adjustment and part, of course, being further through reforms. So labor costs have adjusted a lot. Labor market reforms have proceeded very substantially, and we would probably take issue with some of the messages over the last year or so from some of the international organizations that put labor market reform at the forefront of the things that needed to be done. At this point, again, what we would say is we have gone a long way from where we were, starting from a high level of imbalances, including in the labor market. There has been a major adjustment in labor costs. In some areas, it's actually been part of the problem because wages had adjusted so much more quickly than prices did at times. Real wages took such a big hit that it's been a challenge at the societal level and then for the economy as well. I think at this point, there is a level of price competitiveness that is there. Now, the major implication from this big general overview is that a major cyclical recovery in Greece is overdue. This is something which is a historical regularity after these big and sharp adjustment periods and declines. And I say this, I reinforce this, only insofar as we probably could have made the same argument 1 or 2 years ago as well. So there have been a number of false starts. I was looking at quite a series of variables to show you a very optimistic picture about how that recovery is trying to play out and get through. I think so far there hasn't been as much momentum as we all would have hoped. We're seeing an incipient return to growth, to economic growth more broadly. We're observing it at the beginning of the year, but we had a number of false starts. So at this point, the main source of confidence we can have is that the adjustment really has taken place. Most of the adjustment macroeconomically has taken place, so the groundwork is there for a recovery. It hasn't quite shown up yet. It's hard to show the evident signs of improvement, and that it applies even to some of the areas where the rest of Europe has gone a long way. Even the level of confidence, the level of enthusiasm, it has been fairly steady, fairly stable. Hasn't quite picked up as much as we would like to see at turning points in the economy. Nevertheless, pictures, we are looking at a period where cyclical recovery could be very, very prolonged and overall at some point will exceed people's expectations. Now, our expectations at this point, the expectations of my colleagues in Europe who produce our forecasts for the local markets are very cautious. We think growth will just about be positive this year, maybe at around 0.5% or so. I suspect that those numbers will be too cautious overall. There's clearly room for a much stronger cyclical recovery, even without major additional impulses as such. So growth rates of 2 to 3% should easily be achievable once we don't hit additional impediments. Now, there are issues clearly that are hindering the economy to recover more quickly. There's a range of them, but the one that I wanted to highlight is clearly there is a shortfall of available funding opportunities, particularly in the private sector. I think from the public sector there's a fair amount of help now being put in, but long-term financing in Greece is still a constraint, or more generally the liquidity situation. We have a high level of NPLs in the banking sector, which there is some hope of that being addressed in the context of latest policy measures. Clearly, the fact that we still have capital controls is a hindrance, and the level of FDI, while it's started to come up somewhat, is still relatively low, even in comparison with some of the other periphery countries. Now, on this slide, it's a long horizon, 2009 to 2016, and Greece doesn't look particularly good. And I didn't even put Ireland on this chart because it would literally be off the chart. But even in the most recent context, Greece does less well than it should do, given the level of certainly macroeconomic adjustment that we've seen. One thing I would highlight here is Of course, if we look at the other periphery countries, there too credit had been lagging. Maybe FDI flows had been there. But it is generally the case that in the early phases of the recovery, it doesn't tend to be credit dependent. What tends to be the case is that we need to regain internal profitability, and perhaps there's a bit of FDI. Now, one of the issues so far in Greece has been that profitability hasn't been a driver heretofore. So generating that funding internally has been one of the challenges that sort of build on or make the credit situation a little more pressing than it otherwise would have been. Now again, some hope. There are a number of initiatives on the way, including from European institutions and multinationals. There is an NPL plan in the works, so there's some hope that this will improve. I think ultimately this is a process that probably will continue to lag the economic recovery and will be one of the headwinds. Nevertheless, I don't think this will necessarily stand in the way of a firmer recovery. I think all we really need at this stage for the cyclical momentum to play through is a degree of visibility and stability. And that applies at different levels, of course. It applies to the financial sphere. We have come past, I think, the most urgent point for this year with an agreement on the latest set of disbursements. So the financial cliff, if you like, is going to be overcome. On the political side, of course, some stability would be desirable. And again, we are not worried near term about that outlook, be that in Greece or in Europe as well. And of course, the broader global and European economic backdrop can always throw a spanner in the wheels as well. And again, we don't see these major near-term concerns. So that sums up to a view that suggests that we will get probably some level of visibility near term, which should underpin a recovery and therefore help us outperform probably our current pretty modest growth expectations. Now, I just to put that into the European context, because I think obviously Greece and the rest of the Eurozone will continue to interact in very relevant ways. Europe has been a major source of positive sentiment. More recently has outperformed relative also to the US, relative to many parts of the rest of the world over the last 6 months. And it is a picture now in the Eurozone that, generally speaking, we see as very resilient in economic terms. It's a very broad recovery in the sense of being broad across sectors and across countries. Clearly, the distribution across countries is so critically important in Europe. And we are at levels of growth momentum that probably aren't sustainable for the very long future, but certainly are at the high end of what we had been hoping for the last few years. So growth in the order of 2% for at least another year or two are our current expectations, and I think that's a very positive backdrop for Greece, but certainly for the European context. And I want to emphasize that even the bits in Europe that were lagging, the economies that were not growing, particularly Italy, continues to be a major concern. We see some level of growth momentum there. Investment had been so weak over the years. Now we're seeing a fair amount of momentum on the investment side as well. And this is very much a self-generated recovery, so it doesn't really rely on the external drivers that much, even though it does probably rely on a decent amount of policy support. Now, for the purposes of this very quick presentation, I wanted to reinforce that we do think there is room for a prolonged cyclical recovery in principle in Greece, and that could play out beyond our expectations. If we go back and if we look at the other program countries, Ireland, Portugal, Spain, without exception, we went through a period where eventually growth substantially outperformed people's forecasts once the recovery took shape. There have been a number of false starts in Greece. Right now, I hope we've seen all of them and we can look at a period where the recovery can actually play out. So my best guess is we will probably see the outturn exceed people's current expectations, including ours, which are not particularly optimistic even in a relative sense. And that means even in comparison to, let's say, the numbers that you see in the IMF's or the ESM's long-term projections, I think it's easily possible, certainly over a 5 or 10-year horizon, beyond that is anybody's guess, but over the 5 or 10-year horizon, we could clearly be able to grow faster than the sort of 1.5% or so that people tend to pencil in. Now, the interaction with Europe, however, is something which I think has many nuances over the course of the next year or so. There are essentially two sides of that coin. We have already mentioned a very positive economic backdrop in Europe right now, and that's a tide that should also lift the boats in the periphery. 2% growth in the Eurozone average should be very supportive, also for Greece as a trading partner. And then we have a political dimension, which is also improving. We have that hope of a reinvigorated French-German axis. We're getting past probably the last near-term political hurdle, a German election, which will probably be fairly uneventful, but it has been a constraint, of course, in dealing with some of the issues. So we have hope that both on the economic and the political side, there will be some tailwinds, if you like. But at the same time, we also have I think the counterbalancing forces, and again there are some, I think both on the political side and on the economic side. I think on the political side, at this stage Greece is not a priority for a lot of the European partners, so it has to be seen in the context of what will be a priority over the next few years, which is just basically a long way of saying I don't think we will see a dramatically different attitude in Europe when it comes to the policy front over the next few years. Even when we get past the German election, I think we will deal with a very gradual approach to many issues, including to those debt relief negotiations, once again in the course of next year, where a lot of the work will take place. I don't think we will see a dramatic change in that landscape. And that also applies to the overall Eurozone backdrop. I don't think we are looking at a much more deeply integrated Eurozone in the next few years, despite the better French-German relations. And then there is also I think the implications and the follow-on effects from better growth. We are looking probably at monetary policy, which will be somewhat less supportive. We will see a tapering process play out probably over the course of 2018 in the Eurozone. I think one of the issues which we've had to deal with right now is that despite Greece lagging so much, there is still a growth differential with the rest of Europe. So Europe is growing at 2%, Greece growth in Greece is barely positive. So I think Greece might be challenged here and there by being exposed to a macroeconomic policy environment that it's not fully synchronized with. So we will see some element of monetary policy tightening. We think it'll be probably pretty gradual, pretty slow over the course of the next 12 to 18 months, and that might well be adding to the challenge rather than help reinforce, I think, growth prospects. That being said, again, if we look at a number of other examples, what we observed in the last few years is that once a cyclical recovery gets going, it isn't necessarily reliant on monetary policy to support it. So if the cyclical recovery has some resilience by itself, I think it can withstand modest headwinds that right now we're observing in the US, which is at the tail end of its recovery, but we're still observing a process where monetary policy tightening is going along with still very benign financial conditions. So I wouldn't necessarily see ECB tightening as a hard constraint on Greece's recovery prospects, but it might not be an additional support. So let me leave it there. I think we have a couple of minutes for a few questions, which I'd be happy to take on Greece, the Eurozone, or in fact the rest of the world that I also tend to monitor.
My name is George Kumbaros. I'm from the Greek Investors Association. I get the sense that the NPL issue is downplayed. And my question is, if we see another year and a half of the 0.0 something growth, how much of the risk is there for, the survival of the banking system?
I mean, my take, and I have to say that I don't watch the individual institutions as closely as some of my banking analyst colleagues. But the way I would phrase it is, it's definitely true that the banking system can be a cornerstone of a turn in confidence, and we've seen this clearly in Spain. We've clearly seen this in Italy. Portugal has been a bit of a trickier issue. So to take the other side of the question, I think the situation where you finally manage to put the banks on a sounder footing will make me much more confident about the cyclical recovery coming through. Now, the flip side of that is if banks are an ongoing and acute concern, then I do think they have the potential to stop recoveries. In this specific instance, there are more people in the room that watch the situation more closely than I do. I would say that when it comes to the normal functioning of the economy right now, my understanding is the Greek banks aren't all that functional anyway. So we are relying to a significant extent on non-bank sources of funding, on institutional sources of funding, and so forth. So that's obviously a bad situation to be in, and capital controls are part of that story. It does, though, tell you that we don't entirely rely on the banking system. So whatever dysfunctionality there is, we are already factoring in a fair amount of downside from it. So I would think of it as a major source of upside, but clearly this is one of the issues that has to be ticked off before we can have decisive confidence for the recovery to come through. And it's been a process that obviously has been slower than all of us had hoped for and expected.
Someone wants to invest in Greece, and they say, why? Why would I invest in Greece right now with the political situation the way it is, the banking system? You mentioned there's no profitability. Why would someone go and invest there? Would they find the specific sectors that are profitable? Because clearly there are companies that are very profitable in Greece and self-sustaining. What would you suggest as Citibank to your clients?
Yes, and I have some colleagues here who deal with these issues on a daily basis, and I think the next session will tell you, I think, in some great detail why you should be investing in Greece. I think the macroeconomic story there really is that we should be expecting a prolonged cyclical recovery, and that right now, and often at these turning points, you do see, if you like, the benefits of the adjustment, which usually mean low costs. Now, it remains to be seen. We have to see some of the reforms also feed through into how easy it is actually to do business, which has been a constraint in many places. But I think the big picture rationale should be we are now in a benign cost environment, and we should be looking at a period where both the internal growth prospects, because of the cyclical recovery, and the external ones, because the European economy is doing well, give you a fair amount of upside. Now, I'm sure that that's a very sectoral story, and we know historically what the strengths of the Greek economy have been around shipping, around agriculture, and around tourism, and so forth. The hope is that that can be broadened. And of course, usually what's played a big role in Europe in recoveries has been a manufacturing sector. And that's been something which we haven't quite seen as much yet in Greece. But I am convinced that ultimately it will have to be a sectoral calculation rather than necessarily just counting on the economy-wide improvement overall.
I've been following the work that you've been doing both on Greece but in general, and my understanding is that for a long period of time you were strong supporters of the idea that Greece should leave the euro. Have you changed your idea or your views about that, and if so, why? Thank you.
Yes, I mean, and I'm glad you asked that question, because absolutely we never supported the idea. And certainly I never did, in the sense that I never thought that it would be good for Greece or good for the Eurozone. Now, we can have a long discussion about all the policy mistakes over time. If we look back 10 years ago, would decisions have gone differently, would we necessarily be in a worse place than today? I think that's certainly up for debate. What we did consider some time ago was the at the time imminent risks, and there was a fair amount of debate within our group as such. And I myself didn't put a relatively high probability on the question of exit in likelihood. Again, very different from its desirability. But away from the historical analysis, if you like, certainly those risks are much lower now. Unfortunately, I don't think they're zero, because we haven't seen that recovery that I think puts Greece onto a very sustainable economic footing, but I think that we will get there, but it is slower. But certainly I think the risks are much lower now. The risks are much lower, in part because some of the efforts have taken place. We've seen the macro adjustment and some degree of financial reform, economic reform. But the risks are also lower because we don't have as many of the sort of deadlines that were a critical constraint in the past. So our view has shifted. But I would also say we were always on the side that thought it isn't obvious what the benefits would be for Greece to leave. And if you contrast, let's say, my view from that of the German finance ministry, where here and there the idea had been articulated that a Greece exit has a lot of benefits, I would fairly strongly disagree with their rationale.
What percentage is industry as a percentage of the total GDP?
I wouldn't know off the top of my head, I have to say. It should be a small. I mean, by now in most industrial economies, they aren't really industrial anymore. So even in this country, the number is below 20%. In my own country, which is Germany, it's slightly north of 20%. So in Greece, it is a little lower than ideally I think it should be. It is a little lower, I think, cyclically where we would like it to be for it to be a major contributor to the recovery. But it is another example of industrial sectors not playing a huge role in mature economies.
If I can assist, Greece industry is about 9%. The average European is 15%. I think the target for Europe is 20%, and the target for Greece is 12%.
Well, thank you very much for your time, and thank you very much again for inviting me to speak here.
Hello, ladies and gentlemen. Thank you very much for joining us today. I'm Ilias Athanasiou. I'm representing Enterprise Greece here. Just a few words about what we do. We are a government-owned agency that promotes investments in Greece and trade. Structurally, we belong to the Ministry of Development. I am here along with three of my colleagues in the context of attracting direct investments into Greece. It is also worth mentioning that Sunday, Greece is participating in one of the major international trade exhibitions for food and beverages that is going to be based here in New York at the Jarvis Center. So this somehow indicates the broad scope of our activities as an organization, as promoting Greece to international markets. The previous speakers have mentioned about the development of the GDP. We have lost 27% of GDP in the past 7 years. This is approximately 60 billion euros. To give you a sense of the size, this is almost the size of a state of like West Virginia. So like we have lost one US state in GDP in the past 7 years. The good news is that the GDP has stabilized in the past 3 years, so we consider this to be a bottom. And the projections by the European community are for a good increase around 2% going forward. What has been done over this period is that we have contracted almost zero the government deficit, and also there has been a very serious reduction in the trade deficit of the country. So this is the positive news. Unemployment has been dropping in the past couple of years, 2 percentage points, and the trend is for this to continue to decrease. The most important piece of information on this slide is the declining interest rates in Greece. The yields for the 10-year government bond are again back at the 5% level. This is almost a 10-year low. So clearly, the perception of risk of Greece is again coming back. To give you a sense, probably most of you already know, but the US is slightly above 2%. Some countries that we consider peers, Italy and Portugal, they are around the 2 and 3% level. There was a question before, why invest in Greece? And I'm going to also answer not only why to invest in Greece, but also why to invest now in Greece. So already we have presented the stabilization of the economy. Other issues that have been taking place recently is new investment laws that have been in place, the absorption of the structural funds that are available to fuel the growth of the economy and investments. Development funds, the new framework regarding the handling of the NPLs, which is something very critical. We have NPLs that are reaching around 40% of the total loan portfolio, which is 100 billion approximately. Around half of that is our corporate loans. The rest of that are household loans. Okay, as an organization, we are responsible for what we call the fast-track process. This concerns investments in the country that are considered of national importance. So there are 5 various criteria in order to include the project in the fast-track process. It has to do with the ranges from absolute size, so investments above 100 million automatically fall into this category. Investments of lower levels around 30 or 40 million and job creations of 120 new positions also fall into this category. Mainly projects that are included in the fast-track process have to do with uses of land and licensing. So what happens is somebody, an investor comes and deposits its project to us, and we have a very fast process which is up to 45 days to provide approvals, and then on the next stage this goes to the multi-minister level where they continue with this procedure to invest. So I think this is very important. Up to now, 13 projects have been approved. It's reached an investment level of 3.5 billion. We have another 7 in the pipeline, which are reached in investments, potential investments up to 1.2 billion. We have, we present on this slide selected deals that have taken place in the past 6-7 years. There are approximately 30-35 deals. The important thing here is that 1/3 of these investments are coming from US companies, US-based funds. So contrary to other beliefs that only Chinese are interested in Greece, I think this is very strong proof that a very big part of the investment taking place in Greece is fueled by American funds. And this does not include the most recent investments that have been taking place in 2017 that we'll go over in more detail later. Strategic investments are underway. The privatization of the Piraeus port. This was a project is a project of approximately 1.5 billion. It has a very important strategic importance for Greece as a transportation hub. Currently, the Piraeus port is the 8th largest port in Europe. The plans are for the next 4 to 5 years for it to become the largest one. So the plans, they are very, very ambitious there. Greece also is a hub for energy, so 2 more reasons to invest in Greece: transportation and energy. Other projects, strategic projects that have been taking place is the sale of the Astir Palace Hotel in Vouliagmeni. It's a prime real estate asset that has been recently acquired. It's under renovation right now. Next year it's going to open up again. The former Athens airport. This is a very big investment that's still underway. The privatization of the regional airports. 14 airports. This is a 3 billion euro deal. This is again another very important infrastructure project that's going to help fuel the growth of the economy going forward. Philip Morris investment, another US investment that was not included in the table before. It is a 300 million investment to create production lines to produce alternative. It is for smoking devices, not cigarettes. Insurance, Εθνική Ασφαλιστική, National Insurance, was recently acquired by the Calamos Fund, a US-based fund. We're talking about a 1 billion euro deal here. So again, we see the momentum of investments that have been taking place in Greece increasing. Mytilineos company, this is an investment of 400 million. We have included this here because a lot of people say, okay, you are coming, you're going into international roadshows, trying to attract international investors into Greece. What are the Greek investors doing? This is one very important project that's taking place. It's undertaken by a Greek company. Also, in the previous projects, I forgot to mention that also Greeks are co-investing. So in the Fraport deal, also Greek investors are participating as well. Now about other opportunities. As an organization, we have in our portfolio today 650 investment projects. The range of size for an investment is between the smallest one being 10 million euros up to several hundred millions of euros. So I'll go through a bit through the major industries that we have. These opportunities are included, but we'll be very happy at some point in time to discuss in more detail on an individual basis with you. Tourism, okay, it is probably the biggest industry in Greece. What this includes is upgrading of existing infrastructures, creation of large integrated resorts, marinas that are low investment projects that can fuel the economy and create a multiplier effect in the GDP, thematic parks, medical tourism, privatization of publicly owned assets, of course, land usually, and enhancing the city break experience. Some of the major projects that have already been taking place, you see quite impressive facilities that have been created already. The plans for the Greek tourism industry, as in these projections, come from the industry specialists. For the next 4 to 5 years, we expect arrivals to increase to 35 million. This is plus 10 million people as compared to today. Receipts to reach 20 billion, which is a 30% increase. In order to do this, we need to create proper facilities. The capex required for this to be attained reaches 6.5 billion euros. The result would be a contribution of 43 billion to the GDP, which is something like it's 1/3 of 20% of the GDP at that time. Today, the contribution of GDP to GDP by the industry is 23 billion, so we're talking about a plus 20 billion of GDP there, and employment to reach 1 million. Today it's around 750,000, so we're talking about 250,000 extra jobs. So it's a very important industry there, and a lot of opportunities in this sector. Food and agriculture. I think the Greek diet, the Greek cuisine is very well known abroad. It has a very strong brand name. And is very well known throughout the world and famous. Let's go. Energy, already we have mentioned about Greece becoming transforming into an energy hub in the region. A number of opportunities exist here as well. New infrastructure in gas transmission, renewable energy projects. We have already reached the necessary threshold for solar energy, but there are very strong opportunities that lie in the wind energy producing sector. Using waste to transform into energy and other similar things. Logistics. As I said before, the Piraeus port and the regional airports that are being upgraded will also create a lot of opportunities in the logistic space. ICT, creation of data centers, creation of call centers, software product development. I have joined this organization about a month ago, and I have met a lot of people in the IT industry and have been quite impressed of how innovative they are. And all this human capital that is in Greece, very well educated people that are looking, very eager to work. What they are lacking is capital, so we are trying to help them out on this front as well. Some Greek tech startup success stories. I think the most known one is TaxiBit. It was an application created by a Greek to facilitate, finding a cab. This was a relatively small investment. It was sold a few months ago. Mercedes-Benz bought it for 40 million. So you see how technologically advanced that is, and how Greek innovation can attract major corporations. Okay, some opportunities in life sciences, R&D sectors, elderly and long-term care services, etc. Okay, this is a resume of what we have. So, as we said, tourism, agriculture are the main, let's say, industries, and then ICT, life science, and energy sources. I would leave it here. This is thank you very much for listening, and I'm open to any questions that you may have. Thank you.
How do the electrical costs in Greece compare with the rest of Europe? Are they higher? Is anything be done to lowering them?
The electrical costs in Greece, they are a bit high. We are trying, because a very big part of the production is done through coal, so we have to pay the CO2 fine in the international, let's say, exchange there. Now, as the sector is transforming into increasing the part of increasing the contribution from renewable energies, the cost should start to come down to become more competitive.
So how much more expensive is Greek electrical power than Europe?
Than Europe, I think you have to take countries that are on a comparison, our peers, let's say Italy, Spain, and Portugal. If I remember well, it's around 15% more expensive, but I'm not sure about the number. 15%, I think.
Great presentation. I'm from Israel originally, and I've seen a lot of initiatives connecting Israel and Greece, at least in two areas. One is agriculture technology, and the other one I've seen is in the offshore gas fund of Israel, and talking about connecting Cyprus and Greece. Is that something you guys are involved in?
Who is you guys, first of all?
See anything in that area that you have interest in?
As I said before, Greece is becoming an international hub for energy. So, regarding the energy part of the question, yes, we are heavily interested. A lot of companies are interested in this. A lot of mainly American companies, including Exxon, they are interested in this, and we are a country that has a very big amount of natural resources, contrary to the general belief. So I think this, in the next few years, we're going to see a lot of developments onto this front in the energy sector.
Hello, ladies and gentlemen, and it's a pleasure for me and a privilege to moderate a panel regarding the market experts' view about investing in Greece. By way of introduction, my name is George Koutsos, and I am a partner in Deloitte's Greek consulting practice. I've joined Deloitte about half a year ago, prior to which I was for 5 years the deputy CEO of the Hellenic Financial Stability Fund, which is the recapitalization and restructuring vehicle for the Greek banking sector. As Deloitte, we are very pleased to be involved in most recent transactions involving foreign direct investment in Greece in key sectors of the economy, such as banking and insurance, healthcare, travel and tourism, infrastructure, real estate, and so on. We are pleased to notice that Greece is getting back into the radar screen of international investors looking at opportunities. In our discussions with these investors, there are a couple of topics that keep emerging as key themes and prerequisites for foreign direct investment in Greece. And these involve a stable and investor-friendly legal and regulatory framework, and a strong and flexible financial sector able to finance both investors and corporates for viable yet ambitious plans. Against this backdrop, we are fortunate to have in this panel representatives that cover both angles. And if I start from Mr. Papaspirou from Piraeus Bank, Executive General Manager, Non-Core Business and Restructuring Portfolio. Moving to Andrei Kuzvek, Director, Local Currency and Capital Markets Development from the European Bank for Reconstruction and Development. I move to Nicholas Papapolitis from the Papapolitis and Papapolitis Law Firm, who is also the chair of the Investment and Finance Committee of the American Hellenic Chamber of Commerce, and then Mr. Alexandros Metalinos from the Karadza & Partners Law Firm. Just to set the scene, and given that the EBRD has been a very active investor in Greece lately, Andre, could I ask you just to give an overview of your recent activity to the gentleman?
Thank you very much, and it's a pleasure to be here. Thank you for the organizers. It's great to be part of this attempt to open the eyes of the investment community globally to go back to Greece. Now, on EBRD, for those of you who don't know, we are owned by 65 governments, US being the largest shareholder, European Union collectively having a majority stake. We have a AAA rating. We have a 25-year track record investing in emerging markets in Central and Eastern Europe, former Soviet Union, now also North Africa, Turkey, and so on. We are relative newcomers to Greece. I think it was the global financial crisis and then the need that emerged from that for us to engage, and the Greek government applied and our shareholders approved us to start investing in Greece only 2 years ago. In these 2 years, we have now invested about €1 billion out of our own balance sheet. Our strategy has been relatively simple. We are supporting, number one, competitiveness of the Greek economy on a broader scale. We are trying to help Greek corporates, but also financial institutions, to regain access to finance. And then lastly, both of those to contribute to the resilience of the economy. So where have we invested this, the billion that I mentioned earlier? It's about 20 different projects. We started off with the banking sector, where we took equity stakes in each of the 4 largest banks, in fact. And we have also supported the banks through a number of other instruments, like securitizations, where they essentially offload some of the existing assets to free up capacity for new lending. We have also bought from our colleagues here, Piraeus Bank, an insurance company stake. And in terms of the products, equity was mentioned, securitization was mentioned. We have also done mezzanine. We have taken a significant investment into a private equity fund. We have given a subordinated loan. We have given a number of senior loans. We have even new for ourselves participated and invested in the Greek bond loan structures. So it really is relatively, I would say, sector neutral or the product neutral that we have put our chips on. We see the Greek economy. I think the worst of the challenges are probably behind us by now. We are more optimistic today than we were 2 years ago. We are more optimistic today than we were a year ago. We see the capital market also playing a rather significant role in this renewed recovery and as an alternative source of financing. And that's why when we think of our specific sector strategies going forward, the banking sector I already mentioned, we would like to continue supporting structured products such as covered bonds, maybe securitizations coming up, hopefully also participating in some NPL resolution structures. In the corporate sector, we would like to focus on the corporate bonds. I'm glad to say that, in fact, this morning in London, the EBRD board has approved another 100 million euro of a bond framework where we can invest in bonds issued by Greek corporates. Energy efficiency is a big topic also for corporate sector. And then finally, in the energy sector and the infrastructure, we would like to see more privatizations, and we are happy to put our money there. We would like to see possibly PPP structures, or the private-public partnerships. And if anything supports the regional cooperation and integrating Greek more into the neighboring region, that is something that we would like to do both for the physical infrastructure as well as for the capital markets, where I see Athens Stock Exchange, in fact, potentially playing a much greater role also on the regional scope. It's one of the very few EMIR-compliant central counterparty, CCP structures that Athens has, and that could also provide services to other countries across border. Thank you.
Thank you very much. A topic that has attracted a lot of attention lately in the banking sector is obviously the resolution of the existing high stock of non-performing loans. There is also an ask to create an active secondary market for NPLs. Alexander, would you be so kind as to give us an overview of the recent changes in the legal and regulatory framework around this field?
Well, to start out with, when we entered into the crisis, our overall framework was not capable with dealing with it. You had small groups in the banks that were dealing with NPLs and didn't have the capacity to deal with the tsunami of NPLs they were facing. You had a corporate culture that wasn't accepting the notion of failure and of second chance. You had a bankruptcy code which was effectively a black hole of value. If you had a company enter bankruptcy, the value just evaporated for all the stakeholders. The first reactions to the crisis were mostly counterproductive. So you had an ill-conceived moratorium on enforcement on housing loans for which started in 2009 and ended in 2014, which created strategic non-payers. So it was very difficult to turn this around from a regulatory point of view. Now, there are three major sectors to look at in looking at NPLs. One is who manages NPLs. And that is very crucial because, as I said, banks, it's very difficult for banks to grow in-house the capacities to do so. And also, if they're going to sell portfolios, investors will want to have independent servicers because they instinctively do not trust the bank that provided the NPL to service it after it's sold. So it was very important to set up those kinds of companies. There was a political requirement, I would say, to have them regulated. So a new kind of regulated entity was created. That was done in 2015, late 2015. Now, a number of NPL management companies, well, loan management companies in general, they're also allowed to service performing loans, have been licensed, and the framework has become easier. We were acting for the first American fund to invest in that kind of company. We had to spend quite a lot of time trying to convince the Bank of Greece to grant us the license. We were the first to do so. Now the hurdles we had to pass many of these have been abolished through a recent change in the law, which is good. So this is something that is taking place, and you actually have these companies newly established, onboarding assets and managing them in a much more active way. Now, the two other fields we have is how do you deal with household NPLs, mostly residential mortgages, where you had, well, first of all, you had the moratorium, which I mentioned. Then you had personal bankruptcy law, which was introduced in 2010. Actually, this was something that had to happen at some point because all developed countries have personal bankruptcy laws, but it was misused not to really give a second chance, but to allow people to postpone resolving their issues. So they would get preliminary measures prohibiting enforcement, even outside the moratorium, and that for many years, and they would not really deal with their debt problem, discuss with the banks, sell their assets, and so on. Plus a number of other technical questions I don't want to bore you with, like what were the minimum prices for selling out real estate, which were too high and you couldn't have effective auctions. Then you had some social unrest in relation to all of that. Now, all of this, through successive amendments of the law, have been dealt with, and the last couple of months we've started having effective enforcement. And that is very important, that it may have the possibility of a large upside there. Because if you think of it, you've had people who knew that not paying their mortgage wasn't going to result in their losing their home, and that was for a duration of 8 years. Now, that creates a huge incentive not to comply. Also, having political forces from time to time arguing for across the board debt relief. Paying your mortgage felt a bit like, contributing to charity. Now, what has happened now is that people are feeling the pressure, and the banks believe that there are 25% strategic non-payers. Actually, it could be more. Nobody knows, and nobody will know until we've had some time of traction and enforcement. Now, going over to corporates, now there the problem is that we have family firms where you have equity being wiped out quite often, but not being willing to cede control, and banks being reluctant to enforce. The legislation has changed in a number of ways. Actually, in some respects, we have one of the most progressive bankruptcy codes in the world right now. Actually, there will be a European directive coming, and we'll have to make our bankruptcy code a bit less resolution friendly than it is now, to comply with everybody else. Now, even though we've had these changes in the law, it has taken some time to actually implement them, because the courts were not didn't have the expertise, because the banks were reluctant to make the deep cuts that were required. But slowly we have started having transactions. Last year there was a big one. The biggest supermarket chain, the former subsidiary of Carrefour, was successfully restructured, a deal of more than $1 billion using the pre-bankruptcy resolution law. So slowly we are seeing a lot of change there, and there's a lot of opportunity for investors to go in and make money while helping restructure Greek companies.
Thank you, Alexander. It's good to know that in certain respects we are ahead of the crowd and we need to pause. That's interesting. Now, looking at the same topic from the investor's angle, Nicola, would you say that this legal and regulatory framework is enough for investors to start really thinking that they can put their money into NPLs?
I think, first of all, there's a lot to do still. And just to add to what Alexandros was saying, I would like to start off by saying that in Greece, we generally have a misconception about NPLs and the sale of NPLs of assets from banks to investors. Actually, if you take examples like Ireland, like Portugal, like Spain, like Italy, actually the sale of NPLs is one of the ways that you have growth in the economy, and you have countries that have had very quick turnarounds. Investors, what they'd like to see when they come into these transactions is they want to see the ability of having, first of all, bilateral discussions and negotiations with banks. In Greece so far, because of the way we're structured, you see banks doing processes. You need to have a financial advisor that's an investment bank. You need to invite a number of investors that participate in the process, and that means essentially if you're an investor, you have to spend a lot of resources, a lot of time, a lot of money, and at the end of the day, you're not sure if the actual portfolio is going to be sold or at what price, and you may not be the preferential bidder. So all of these things are actually obstacles. At the same time, what we do face now, as Alexandros was saying, is that you have a very slow court system. So we may have a very progressive bankruptcy law that's new, but when you look at actual times in order to complete an investment transaction and actually get hold of any asset through an enforcement, you're looking at years ahead. So that's actually a major obstacle that you have when you're looking to invest in a market. Now, coming back to the other point of the processes, I think one of the vital things that we need to definitely change in order to get much more traction, much more investment, is the fact that we, unfortunately in Greece, have laws that allow for personal liability to be attached to directors or members of boards of banks. So you need to have people who are capable and they're sitting in these positions to make executive decisions to sell at proper prices without having to think in the back of their mind if someone who's not the same, actually has the same business capabilities or the same know-how coming and telling them they breached any fiduciary duty or they did something wrong. So having all these obstacles, at least in our minds, in place, what you eventually have is investors looking at these transactions and attaching some type of a discount in the portfolio and the asset, which may not be relating to the actual core of the asset. So when you come in and you are the seller, you may end up in a situation where you get a price which may be at the end of the day value destruction than value creation. So you may not have the actual sale. So, I mean, having said all these things, I think the vital considerations that we need to take into account is, first of all, we need to change in Greece the way that we look at NPLs. It can definitely be a situation, like I mentioned, in other countries of a turnaround in a way of getting money into the economy, and we definitely need to take off any type of law that attaches personal ability to directors of Greek banks.
Good. So it appears that until recently the Greek banking sector was constrained by a number of topics: capital, liquidity, and the absence of a conducive legal framework to tackle NPLs. All things considered, Spiro, would you say that things are now in place, the stars have aligned for you to be able to proceed? And how do you see the role of international investors in NPL resolution?
Yeah, I like the expression, the stars have aligned. Actually, every time it's a little bit delayed, but this is more or less where we are. And I have just to add to what was said before, by and large, the two biggest impediments in selling loans was really that in the past, the Greek banks didn't have the provision level, didn't have the capital structure to take the hit of whatever else was going on in the country. And because of the macro situation, there was always a very big discount on top of everything else, of the lack of servicing, of lack of data for foreclosures. There was another 10% which was added up as IRR for everybody who wanted to buy something, buy these assets, just because it was Greece. And this was on top of Portugal or Spain or other countries that have faced similar problems. So obviously, even after the full recapitalization of the Greek banks, the prudent thing to do was to deploy all the toolkit as a bank and have sales structures, internal capacity, and try to internally work out the cases and buy time till the macro becomes better. And this is what we are doing, really. But we have advanced a lot in the way we are handling this team. We have formed the NPL forum between the 4 systemic banks where we manage and align our strategies on all the big tickets, because this was another big impediment, that every investor had to go around the banks and everybody had a different strategy on how to deal with it. And now, out of this, we have initiated another process, which we call the SME initiative, where we're talking about creating a platform between the 4 systemic banks of handing over there all the viable and some non-viable SMEs, end-to-end management plus financing, bridge financing for these companies, and then we can add a financial structure on top of that, or even, and we're in discussion about that, a sales platform that we can market these loans to the international community. These are things that were not existing a year or 2 years ago. But I have to say that overall there is a very big improvement, which we cannot see yet the result, because we still have a lot of formation of NPLs. We still have redefaults because of the macro conditions. And we hope that as we get into the next phase of the economy and people get into some kind of optimism about the future, they will stand behind their loans. I fully agree with what was said about the mortgages, but people cannot stand behind the loans if they don't have an expectation about the future of having a job, of having a role in the economy. And I think this is the next big thing to happen. We already see that there is a change in the payment culture in the country, starting from business cases and moving on little by little to retail as well. But still there are things to happen, and mainly to have a positive macro outlook. International investors obviously play a very important role. For us, with the level of NPEs and NPLs that we have in the country, it's impossible to manage it only internally. We cannot, for example, do debt to equity swap when we have 40% NPEs, because we would end up being equity, we will change our role as banks. We'll be fund managers at the end. So obviously we need investors to be around us and help in this process of reducing the NPLs of the country.
Interesting. Thank you very much. With all this discussion about NPLs, we tend to forget that the primary role of the banks is to provide financing to the real economy. So if I stay with Spiros a bit longer and we move the topic into financing the real economy, what is the bank's strategy in this respect? Again, what's the role of international investors? Do you feel ready to move beyond the existing mountain of NPLs and just look into viable business plans and stand behind them to finance them?
We are definitely, and this is our strategy, and I think all of us are working towards this direction. Very recently, our bank announced that we are really separating the bank into two. We have the PLU, which is actually the NPE and whatever is out for sale, and the front book. So from a management point of view, we try to separate completely the two sides of the bank, because this is a very peculiar situation. It's only us and Cyprus that have such a high level of NPEs and NPL. But obviously, the demand for loans right now is very low. For example, in retail is even non-existing. We used to have, as a banking system, more than 1,200 applications a day, and now we have 80. 80 is nothing in a country of 10 million people. We used to have more than 32,000 applications for consumer loans and credit cards a day, and now we are at 4.5. So this is really a flat line. There is no demand because people are feeling very insecure. And obviously this needs to change. On the other side, on the business side, as a bank we have a plan to increase our new lending from 2 billion that was last year to 5 billion gradually for the next 3 years. And then also utilize EBRD, EIB's program, the structural funds, the European structural funds. But obviously this is going to be based on a completely different model. Greece was, I think, on a scale of where there was bank financing, it was on the far right side. We were financing 90 to 95% of the needs of a company. Obviously, this is not going to be the way forward. We will need private equity to be part of it, and we need also the Greek businessmen to understand that they need a new model. Most of them, the new businessmen, they understand that. The large corporates, they seem to understand that. They're issuing bonds. They're trying to use other sources of financing their business, complementary to bank financing. And I think this is the way forward. It will take time before we develop all the tools.
So, looking at our supranational friends, how can you help? What's next? You alluded a bit earlier, but can you give us more color about what's next for the EBRD in Greece? Instruments, sectors, cooperation with the banks, and is there a level of firepower that you think is attributable to Greece?
I would first say that I think the one word that describes what is needed for all of these issues that we discussed here, on the legislative and legal side, all the way to the actual bank financing, and that the word is trust. I think we need to re-establish trust. And the trust is relevant for the Greek companies, that they see the future being brighter than today, so they actually want to invest, and only then will the demand for bank loans again start to increase. There is obviously also an issue of alternative sources of financing. Private equity was mentioned. I think public equity is equally important, and when the privatizations happen, I think it's important to do these also in a transparent way, possibly through the stock exchange, opening up and also giving an opportunity, again, for something big enough to pop up on the radar screen of foreign investors. And we would then be one of the conduits of really bringing the foreigners back, because for the debt financing, we have something that we have as a statutory preference, which is called preferred creditor rights. So moratorium, default of a sovereign debt, etc., in the country is not going to apply on us, and we can take on commercial lenders to participate in our loans, to then go out and start again, increasing the maturities as well. I think there is one major dilemma in today's world, which is that we went through the crisis, many of us got hurt, and by the way, the NPL ratio, Greek and Cyprus being the highest, is true for the EU, but we operate in countries like Ukraine and Kazakhstan, where the ratios are even way beyond, and the problem is, even more difficult. But I would say that the dilemma is, in today's world, post-crisis, and much stricter regulatory framework being imposed at the same time when the recovery hasn't really happened, and much of the banking sector and other financial sector players being able to only invest based on a very model-based and model-restricted ways, i.e., the risk-adjusted return on capital and all these type of things, the country rating of Greece being very weak is hurting everybody. I think, whilst we focus on the private sector, then the fact that the sovereign rating is so low is a major impediment. And I think we need to see the economic growth taking place again. We are predicting for Greece for this year 2%. That prediction was done a few months ago, and over the past few months we have seen better and higher than expected growth in some of the neighboring markets. So I think we might actually, exceed that 2%. But to help the sovereign to gain ground again, and then the private sector to follow.
Excellent. Moving a bit into investment instruments. We know that investors are looking to invest across the capital structure of a company, from senior debt to common equity and in between, using various structures such as securitization and so on and so forth. Alexander, would you say that the Greek legal and regulatory framework offers a full range of options to investors? And again, what's the role of the capital markets in this respect?
Well, I would say almost full. So we have, we have common equity. We have a lot of flexibility on preferred equity, on how we can use preferred equity, even though Greek companies haven't really made use of that flexibility that was introduced 10 years ago. We have a quite flexible bond loan law, and actually our host, the Athens Stock Exchange, helped in persuading the government to make it a bit more flexible by removing the interest rate cap, which happened, I think, 9 months ago now. Even though in the end it wasn't necessary for the first issues of bonds that were well below the previously applicable legal limit. It's very good that that restriction has gone. There are still things that could happen, and we would need, like the institution of warrants. Actually, there was, I don't see him today, there was yesterday an investor who comes from a US fund that uses heavily warrants for a specific tailor-made investment product that they were trying to introduce in Greece as well. We managed to do that through a hybrid structure, but it would be much better to have the institution itself. We don't have the possibility to staple instruments together, so you sell warrants together with shares, or bonds together with shares or with warrants, and destaple at some point. So there are a couple of things that could happen. Yet there has actually there is a draft law that has been presented to the government a couple of years ago. We hope that the government at some point decides to proceed with it. But as I said, most things that investors need to do, they can do. Wherever an instrument doesn't exist, we can be creative and try to achieve the same results through a hybrid structure, but there are things that could be done to make things better.
Thank you, Alexander. Now, moving into a very interesting topic which has to do with incentives for investors in general. Nicola, could you provide an overview of what you think is already in place? But of course, is there something more that can be done? And looking at this and taking a more general view, would you say that now is the time to invest in Greece? The stars are really aligned?
Good question. So I think one of the predominant factors, if someone were to be looking at the Greek market, is that it's the only economy in a period that's of peace, of non-war, that has suffered almost 9 years of consecutive recession and has not defaulted. So I think that's a predominant parameter of someone looking at the country. Essentially, the big question is, am I coming in to invest at the bottom? Is there a bottom of this barrel? Is there significant upside? And I think the answer to that question is yes. Greece has been, since November of 2009, through a roller coaster ride. Before, the CEO of Enterprise Greece was mentioning 29% decrease of GDP, how much we've lost. We've gone through consecutive elections, coalition governments, referendums, bank holiday, capital controls, and all of these things now belong to the past. So I think the answer to the question is definitely someone looking at the economy. We've been through so much, and there's significant upside to be made. Now, in terms of actual investments that have taken place, you see that so far it's a country where you have either investors that are very sophisticated and are able to structure investments and have an asset management background and gain significant upside, or you see institutional investors that are entering to the country and acquire assets that relate to infrastructure or assets that have a very long-term horizon. The framework as it is now provides, and I think that's one of the good things that we have in Greece, the so-called government grant. So you are allowed and you are able to take advantage of the fact that you're given essentially free money when you're investing in projects that have to do with some sort of development and job creation. You also do have the agency as Enterprise Greece, and we have the fast-track laws that essentially are a hub in order for Greek bureaucracy and red tape that is an obstacle for penetrating the market to be somewhat decreased. But I think one of the things that we have generally and at the Chamber advocated very rigorously is that we currently have a tool that's existed in the Greek legal framework since 1953 that we're not taking advantage of. It's a law that was essentially implemented to allow foreign investors to make a petition to the Greek Minister of Finance, essentially to allow them to create a special investment framework for the investment that they want to create. And that regulation, legal framework that is in place currently, allows even for matters that relate to taxation, even predicted matters relating to international arbitration clauses, so you don't have disputes, you don't go through the Greek court system. And we do have actual investments that have taken place in Greece that are based on this law. One of them is the Athens International Airport, which is one of the biggest assets in Greece. So what we're trying to promote and aggressively tell people and educate people that are looking at Greece, especially for large institutional investments, is that we do have a tool that allows you to override some of the actual impediments that you do have in the Greek market today, one of which is the constant change of taxation. The other is a very slow Greek court system that is very difficult, again, to amend and change. So as a chamber, and whoever wants to know more, we're very happy to tell people about this tool that exists. We've been trying to promote this at a government level as well. So we do hope to see more investments coming through that law. And actually, a good recent example was actually the privatization of the regional airports that took advantage of this law as well. So we do have actual investments that are taking place now in Greece that use this tool.
Great. Moving a bit beyond the benign topic of financial returns, which I assume some investors are interested about. For example, we know that the EBRD does not purely have financial investment targets in its philosophy, but there is also this development word in the EBRD title. So could you elaborate a bit on the investment philosophy? And again, should investors find themselves investing next to you, what more can they expect beyond monetary issues?
Thank you for this question. We have what I personally call, it's not a formal name for this, but I would personally call a holy trinity of EBRD, which is the number one, we only invest when we see a sound banking case. We do not go and give soft money, and we focus on the private sector, as I said. Number two, this is the developmental aspect. We try to bring something more than money, i.e. we try to either at the level of that particular company, be it corporate governance, marketing, energy efficiency, reporting standards, whatever, to bring a change, to do it maybe also on the sectoral level, for a specific sector, to create a case which is a positive demonstration to others, or something that really helps the economy as a whole, and I hope most of our deals do. And then the third part of our holy trinity is what we call additionality, i.e. we try not to compete with the private money, but rather we try to plug the holes where the private money is not available, or bring the private money alongside. We are known in our 25-year history of being very thorough on our due diligence. And it is, I think, largely thanks to that we have a reputation that, look, EBRD is also bringing kind of a quality stamp with its investments. I'm glad that is the case, but I would always recommend each of you to also do your own due diligence. And sometimes when there is a time lag of our entry into either equity or loan products versus you then coming in a year later or two, things do change. But what we do offer is we are a long-term partner, both to the investee company and the borrower. We are also a long-term partner to the co-stakeholders, be it shareholders or fellow lenders in a syndicate. And we always care what we leave behind, i.e. we do have, as you said, other goals other than monetary, so we never sell to somebody who we think is not conducive to further positive development in the country. With all these limitations and the Holy Trinity I mentioned, we have been able to make money, and we have been able to make more money, what we call is the post-crisis vintages, i.e. when everybody's pulling out of the market, we often go in, and interestingly enough, the history shows that none of us can never perfectly time the market, but if you create a flow and you take a view and you trust the investment case of a specific country or region, it does pay off, and the payoff is higher on the post-investment situations.
Great. I think investors are glad to know that they will find a good partner in the EBRD. Now, staying a bit in non-financial topics, there has been a lot of publicity around the changes in the corporate governance of the banks. And given that we have Spiros as a representative of the banking sector in this respect, could you just give investors an overview of what has happened lately, and if you are receiving any feedback in this respect, how is this change being, let's say, comprehended by the international investment community?
Yes, okay. Well, this is a rather European directive. It didn't happen for Greece, and it applies for all European banks, mainly because on the one side we have a very heavy regulation on the banks, and particularly if you try also to comprehend whatever is coming in the next couple of years, it becomes an impossible exercise for somebody who's not an expert. So there was a need for experts to be in the boards of the banks across Europe, and we started from, and we're particularly talking about Greece now, where these people could understand the risks involved for both sides of the balance sheet, for liquidity as well as for the loan side. So although we had some very important and successful people in our boards, the issue was that they didn't have the particular knowledge to understand the risk function of the banking sector. So this was one reason for the change. The other was that the SSM, the Single Supervisory Mechanism, wanted to ring-fence the banks from any connection to political parties and connected borrowers. And this was obviously the right thing to do, particularly in a small country. This was extremely important. And this started happening back in the liquidity crisis of 2015, and it was concluded with the changes in the boards of the Greek banks. We had very important people in our boards. We continue to have even more important and successful people in our boards, and I think that we are proud to say now that as a bank we have 3 CEOs of banks in our board. So we are at a very different level in terms of knowledge and capacity, and they are also very focused in their new role of managing the risks involved in banks that have NPEs in the range of 40% of their loans. So I think it was a successful exercise in making the banks more transparent and more trusted in the international community.
Good. Let's now open the floor to some questions. So anyone want to ask our experts anything? Lady?
I would like to ask the panel, especially Spiros from Piraeus. You said that only 80, you get 80 applications. That reflects to me, and I've been watching it, the restructuring of the whole economy of Greece. Besides the large sectors, the large capital sectors, the majority of investments were family-owned. You had small businesses, and exactly this is the sector that has completely collapsed right now because of taxation, because of lack of profits. And I see, as I'm watching it from New York, that the whole economy is being restructured. So I'd like to hear your opinion. The new Greece, when it comes out, it's going to be a different Greece. The economy is going to be different. What future is there for the traditional family-owned Greek economy? Because that also reflects on the social structure of Greece. How is that impacting the middle class in the future? And you mentioned, Spiros, you mentioned confidence. How can they have confidence for their future? And I appreciated the fact that you said one reason they're not paying the loans is because they don't see themselves as part of the restructuring. They see themselves as left out. They don't trust. There is lack of confidence. That's one. They are also taking advantage, so they're not paying their mortgages, but also they don't trust their future. So how is this whole restructuring going to incorporate the middle class that is completely getting destroyed right now in Greece? And the social repercussions, because as we saw in the US, we have a completely different regime with Trump. People do take actions, people do respond, and this is something that has been left out today because, yeah, people are responding. And is that being reflected at your level? The moderator has been doing an excellent job, actually, I think, asking questions. So that's it. Any feedback? Because it's the elephant in the room, and we need to discuss it. Thank you.
Yes, obviously, I would need almost an hour to answer this question because it has so many different, which we don't have this time. So I'll try to touch upon some of the issues that you mentioned, that you asked. First of all, I was referring to the individuals and the mortgages because this is a very important parameter. Now, real estate prices in Greece in the residential properties is below construction cost, even in some of the best areas in Athens. So obviously people would jump on this opportunity and get a mortgage to buy property, but they don't do it because they don't know what their future is going to be. If they're going to have a job in a few months, if their salary is going to be the same, and so on and so forth. So it's about trust, it's about optimism, and we know that we suffer on this, particularly on retail. Obviously on the business side, things are better. We see a lot of structural reforms in the Greek economy. We see people moving from services to production, and more than anything, we see bigger companies being developed, which is exactly what we need, because everything in the past, because the Greek economy was growing by 20 and 24% a year, everybody was focusing on the local economy. And this was easy. So producers were producing something, selling it in Greece, very high margins, they didn't have to care about the rest. When the market collapsed, all of these businesses collapsed, and this was SMEs and small business because they couldn't address the international markets. They were too small and they were not good at this. So I think that what is happening now is we see that people are moving in and funds are moving in into creating larger companies, medium size for Greece, that can have the opportunity and the skills to address also international markets. And this is, I think, where the banks are going to focus more. Obviously, we're not going to have the same stratification like we did before in the new era.
Thank you, Spiro. I think if we stretch the schedule, we can probably accommodate another question. So, sir, please.
In 2010, banks in Greece basically could not open transferable letters of credit. We were involved in that business and could not find a Greek bank. In fact, the Bank of Greece, their credit situation was such that their letters of credit were not accepted internationally. Now, has this changed? In other words, can Greek banks security open transferable or even letters of credit to companies overseas?
Yes, unfortunately there was a lot of mistrust at that time, and this was one of the biggest problems that we faced. Most of our customers at that time could not trade because they didn't have money outside of the country, they didn't have banking relationship outside of the country, and they were really hopeless. But this was because there was a lot of mistrust. This was before the recapitalization of the Greek banks. As we speak today, this problem has been solved. Even capital markets are now opening up little by little for the Greek banks. So obviously trade finance is there, and we don't face these problems anymore. So of course, it's not a perfect situation, but...
So you're saying now Greek banks can open international letters of credit?
Yes, we can, and we also have programs with EBRD that are guaranteed.
Just to add that we see trade being a very important component of the future growth, and we have what is called trade finance program. We have it with the Greek banks in a total amount of 200 million euros worth, whereby if the Greek banks open a letter of credit and the provider of the goods somewhere abroad is asking their banks to confirm the letter of credit, i.e. they don't want to take specifically a Greek bank risk, then EBRD steps in and we are issuing our own guarantee on top of the Greek banks so that the confirmation is a non-issue afterwards.
Excellent. I think we'll stop here. We are also right on time, which is again a first for me. One more. So if the organizers allow us.
Yeah, this is for Mr. Papaspirou from Piraeus Bank. My name is Haris Tamoulis. I used to own a company in Greece that was doing advisory and restructurings. The name was Lead Finance, and it was the first fund that was created in 2010. I have negotiated with the banks many deals back then. The framework wasn't prepared at that time. The legal framework. The bankers were not prepared, for restructurings, real restructuring. So we're talking about new money. We invested money in a couple of companies. The banks were not helpful in restructuring the debt. Although we reached a couple of deals, we didn't make it. So we decided in 2014 to close the fund and leave, dissolve the fund. Now, because as we say, us Greeks are not, δεν βάζουμε μυαλό, I'm in the process of raising a new fund directed for turnarounds in Greece, again, focusing on companies that they have a potential to turn around. What has changed in the legal framework that makes the bankers able to do deals faster than they did in 2010? I am the guy now who I'm negotiating with the investors, fund of funds, to direct the funds in Greece. And I'm trying to convince them that things have changed. Thank you.
Yeah.
First of all, I'm glad that you insist, because obviously the timing, and it wasn't your fault, it was wrong at that time. The Greek banks and the Greek system was not ready for this. But I'm glad you insist and you keep on coming up with this idea, because I think the timing is exactly right. I know that Greek banks seem to be a little bit slow moving as we speak, but they are not. The banking theory is that NPLs keep growing 18 months after the turnaround of the economy, and we are not even there. We are close to that point, but we are not even there. So in theory, NPL should be increasing by the end of 18, and we have already started reducing that. Piraeus Bank has reduced by 3.5 billion from peak already, and in adverse conditions. So things have changed. You cannot see the full result of this because of the market conditions, but everything has changed behind it. And particularly, as I said before, we have recapitalized, we have the right level of provisions, we have very concrete commitments quarter on quarter and portfolio per portfolio to our regulators about reducing the NPLs and the NPEs, and we're going to do that no matter what. If we manage to do it without a lot of sales, we will do it without a lot of sales, but we will do it anyway. And on top of that, you will see that Greek banks have become much more sophisticated even in the way they address things. For example, at that time, we were considering net present value, and obviously an internal restructuring would give you a very high net present value. Now we use risk-adjusted net present values, which obviously is benefiting sales. So we do a lot as we speak. We have a lot of sales in process on a loan by loan. We don't do yet massively portfolio sales, although there is one deal announced by a Greek bank, and there is also this big exercise that Attica Bank is doing, which will also test the legal framework with a securitization and financial structuring on top of it.
And once more for Mr. Metalinos. Mr. Metalinos, we have worked together in the past. How do you think, is the legal framework providing at this point coverage to the bankers to restructure that? Because this was the biggest thing back then.
A couple of weeks ago, literally, the law changed and it gave two levels of protection for for bankers. One is that it really spelled out the business judgment rule in relation to restructuring of debt, giving concrete criteria and giving you a safe harbor if you're within those criteria. The second and more important part is procedural, because prosecutors who had been you have young prosecutors in all countries trying to make their name. So there were many prosecutors trying to make their name by pursuing bankers doing their job. So the power to begin prosecution has moved to a 3-member panel of appeals judges who hopefully will be much more thoughtful. Plus, they cannot do it without first getting an opinion, non-binding opinion, but still an opinion by the banking regulator. So I think that in particular the second part should give a lot of comfort to bankers about their own personal liability, and that's both civil and criminal. Yes?
Does that transfer to the buyer of the loan? Does that liability transfer to the buyer?
No. It was never an issue of liability for the buyer of the loans. It was the issue of personal liability of the banker making the decision about whether he or she has breached the fiduciary duty to the bank, and that could also lead to criminal liability. And that was the real scare for the bankers. Because even though lawyers would tell them that 95% will be acquitted, first of all, that 5% weighs quite a lot if you have a family and a career. And second, because just being under an investigation could take years and could be a cloud over one's career, even if that person ultimately were acquitted. That's why it was important to stop the process of starting investigations. And I think that the new law is very good.
One last question.
Go, just for you.
There seems to be an ambiguity when you sell loans into a trust, into an SPV for a securitization, if you can use a third-party servicer, just because the law was written way before the third-party servicer came into play. Mm-hmm. Has that been cleared?
Well, it hasn't been cleared by any official authority, but the biggest law firms, we have discussed it with each other, and we are all supporting now the view that and I believe that the Bank of Greece, even though they have not spelled it out, is also supporting of the view that you can use a servicer. Worst case scenario, in any case, you can use the servicer as a sub-servicer. And because you'll also need the bank anyway to be receiving payments and so on, it's not a big problem. We think it can be surmounted.
Thank you.
Spiro, last point.
You're not obliged to have a servicer. Is that if you want a servicer, this servicer has to comply with this new regulation. So he cannot be anywhere in the world. He has to establish himself in Greece, and he has to come up with all these requirements and get licensed. But still, you can leave the servicing with the bank if you want. You're not supposed.
Yeah, but usually investors don't.
If on a loan-by-loan case, this can be done. But if you're talking about portfolios, obviously it's the investors that want to have a servicer. And then the Greek government says, and the Greek law says, that a servicer must be in Greece and following these rules. That's it. So.
Thank you.
So thank you very much. I think we all found it very informative. Now I would like to call to the stage our last panel, but not least. It's about 3 CEOs of the biggest real estate companies in Greece.
Thank you very much. And I want to thank Mr. Odysseas Athanasiou for joining us from Lambda Developments, the CEO of Grivalia Properties, George Chrysigos, and the CEO of NBG Pangea, Mr. Osteris Karidinos. Well, today we basically heard the evolution of Greece with the earlier panels. We started with the political evolution and developments that basically bring us to the current environment, the current political environment. We heard about macros, what happened and where we stand today. and the previous panel outlined the current investment environment overall. Real estate is a specific investment. We're seeing a lot of investor interest for real estate because as Greece de-risks, cap rates for real estate contract, and we're beginning to basically see significant activity in the space. So I wanted to ask each one of the panel members if they are actually seeing such activity with foreign investors, especially starting with Odysseas. How are things different now than 6 months ago or 1 year ago, let's say, with investor interest into Greece and specifically real estate? And are you seeing that, and how is that expressed?
Okay, take this. That's okay. This works as well. Okay, yes, we see some slight change in the interest of foreign investors, but since we're talking about mainly speculative capital, not long-term capital that much, we know that this mood can change easily one way or another. Now we're seeing the positive direction, especially after the agreement between Greece and Europe was reached 2 weeks ago. And this can be reinforced to a great extent if we show to the world that this time we walk the talk. And this means two things, in my opinion. One is to build credibility, something that we have lost as an asset as a country for the last many years. This means that we implement the reforms we vote and not just vote them. And this means that we keep deadlines. If these two things happen, then the other force that is in our favor, which is pricing. Pricing is very attractive in Greece, and there are many other opportunities in Greece that we haven't taken advantage of. This can act as a big attraction force for foreign capital to be employed in Greece, provided that, as I said, we walk the talk and we do the things that we promised we do. In terms of specific interest being expressed by foreign capital, we had some examples recently. One of them happened actually in Lambda Development. An American fund, Varde, participated in our company, and we can tell you more about this later, buying a percentage in the malls we have and contributing 60 million euros, and showing that they have a desire to increase this amount much more in the coming months. It's up to us to show that we want this capital to be employed.
Ari, as far as foreign investors, what do you think are the major challenges that they're faced with that you have to deal with on a daily basis? And again, considering that all three companies that the three of you run have expanded and thrived throughout the crisis, you're standing in a position right now to, in essence, gauge what are the pros and cons of being an investor in Greece and being an investor in real estate. What would you say are the major challenges that an investor like you or an investor in Pangea would be faced with?
First of all, I'd like to clarify that us, together with Grivalia, were I think among the very few companies that we had foreign investors as early comers. So even in the middle of the crisis, we had very important investors investing a lot of money in our companies. And us as companies, we invested back. I mean, we invested during the last 4 years more than 700 million, which is, you see, a very big amount given the situation and the conditions of the Greek economy. So yes, investors are coming and are, you see, undertaking the risk of the country, and we can invest in the country even if the conditions are very adverse. On the challenges, on the issue of challenges, I think that everything in Greece is very challenging. I mean, during the last 20 years, I have done a lot of investments, and only a very small fraction of them were problem-free. I mean, it's indeed very difficult to do investments in Greece, especially in real estate. You have to deal with a lot of legal, technical problems, which are things that you can solve one way or another. That's why we're doing investments after all. But I think the most important thing that is to have stable and transparent ground rules, which is the main problem that we face as investors. I mean, an investor does not like to be surprised, negatively surprised. So unfortunately, this happens often in Greece. For example, we had this experience a few months ago when our tax was increased by many times, I mean, sevenfold to what we had before. So this is something, this stability is very important. So we've got to reduce or to eliminate legislation risk, which is very high in Greece, and is one of the main challenges we have to face, and I think all investors have to face. So I think that as a country we've got to change that, and we've got to be much more stable in the environment that we create, which is not the case so far.
And it seems that a lot of the foreign investors find an avenue to deploy capital through the vehicles that all three of you are basically operating and running. George, specifically with Grivalia, you have a fairly diversified portfolio of assets that focuses on commercial, office, some retail and hospitality. Where do you think the greatest opportunities lie right now, and where is the focus of your firm?
We have seen the last 10 years zero developments happening, only very few ones coming into the market. And we have seen many of the big, old, established property owners defaulting or not investing in maintaining the property. So all this prime space that we used to have a decade ago has deteriorated over time, and now the supply is a lot less. And this specific category, and both Aris and Pangea and Grivalia have heavily invested there, enjoys high occupancy rates, more than 95%. And the small vacancy that we see in that sector is a structural vacancy of the sector, because we're talking about prime specifications, but very small floor plates like 200, 250 square meters of space, not matching the demand of the multinationals. And since the beginning of 2017, we have started to experience a reverse in the rental cycle of the specific sector. And as long as the economic environment improves, as long as the big companies are performing better and they're hiring people, they're going to increase their real estate needs, they're going to turn to a relatively very small supply, and this demand will drive the equilibrium higher, and this is where we anticipate the reverse of the rates in that sector. Also, we strongly believe that the retail is going to also perform better going forward. Of course, the retail is highly correlated with the retail industry as a whole, and this unfortunately relates with the spending power of Greeks and the consumption, which unfortunately is very low due to the high austerity and the taxation that has taken place in the past. But as things progressing, as the economy moves forward, as soon as we see some growth, and when the time has come for the Greeks to make some money and save some money and then consume, retail industry will recover, and then the retail assets will recover almost simultaneously. We have also started investing in the hospitality sector. We believe it's a very promising sector for Greece, because the hospitality asset class has a completely different risk-return profile from the prime commercial real estate, the fixed income play. We have decided to do it on a separate entity, which is, we call it Grivalia Hospitality. It's a platform that is controlled by Grivalia, but we invite other shareholders and other investors to participate. And going to your initial question, there is a lot of demand for this type of investments, and we feel that it's going to be booming activity for us.
Thank you, George. Odysseas, staying on the subject of retail spending, your shopping malls have had a very impressive performance throughout the crisis. Explain to us, how did that happen? Because it is impressive. And also, what are the current trends? What do you see in retail spending? Is it optimistic for the economy? Where do we stand?
Okay. Regarding the good performance that we had over the last many years, I remind you the crisis started in Greece in the retail sector in 2009. And yes, we did better than most of the retail sector. Probably I can attribute this to two factors. One is the more modest one, which is the fact that consumption in Greece has been in the past and still is very fragmented. We have many neighborhoods, many high streets in many different areas. Every neighborhood in Greece has their own stores. So at some point, we will have some concentration on bigger retail venues. This started happening even before the crisis, and the crisis just accelerated this. So this is what will happen in the macro environment. Now, regarding the fact that we controlled and we tried to gain market share from the rest of the market, what we did is going against traditional methodology, which is instead of curtailing spend in media or in organizing events or making our assets better in the crisis, we did exactly the opposite. We put money on them. We made the assets better. We put a lot of money on experience and entertainment elements, which is going to be addressed later when we talk about future trends. And in other words, the three malls that we have, which are the biggest malls in Greece, became the last resort for retailers who were becoming more and more desperate, seeing their sales in every other store going down. So these are the two things: concentration in bigger venues, and the other things, doing things that would attract consumers in our venues versus neighborhoods where psychology was negative. Consumers were going there, seeing stores shut down, and this definitely doesn't help shopping patterns. These are the two things that help that.
And on the subject of the shopping malls, you mentioned a little bit earlier about the investment that Varda made in the malls. I understand that this is a separate entity. What is the future of that entity, and what are the ambitions there, and what is the logic behind separating it from the rest of Lambda?
Yeah, Lambda started as a development company. We're the first development company in Greece, specializing in large malls. As we said before, we did also some office buildings, some residential developments inside and outside Greece. But we started becoming a hybrid company because an investor actually, who was looking at Lambda, was seeing a company that had development. We had some land plots. Then we had Ellinikon. I'm sure we're going to talk about it. And also we had some investment assets. So we had to separate these alternative investments for specific target groups, and that's why we separated the element that has to do with investment assets. We took the malls, we put them in a specific subsidiary. We sold a part of this subsidiary to Varda, the American fund. With the money we got, and with more money that Varda is going to put in this vehicle, we're going to invest in more retail venues in Greece, and therefore creating the first retail focus real estate vehicle in Greece. It's going to have investment assets, what we think has some future in Greece, large retail assets, and that's why we did the move with Varda.
Thank you, Zia. Ari, you were very convincing earlier with the challenges faced in Greece, and there are some assets outside of Greece. Is your focus going to continue to be Greece and investments in the future? Are you looking at more regional opportunities?
The answer is definitely next few years, the focus will be on Greece. I mean, I think that for all the reasons that have been discussed extensively in this conference, Greece now provides very good opportunities in all sectors, and one of the sectors that will grow as well and give very good returns is real estate. So there is another aspect also that is very important, and we should mention it for Greece. Greece was traditionally suffering from supply. You see, so all of us that we are in the market for many years, we struggled a lot to find deals, good deals to invest in Greece, and we had to invent. Yes, there is lack of supply. That was the problem. It was always lack.
Most markets.
No. The lack of supply. Yes, the lack of supply. So we had to invent the deals, to construct the deals in order to make them. We had no opportunity, like our other colleagues in all the mature markets, to buy from the shelf, to cherry pick, to do all that very nice stuff. We had to struggle, really struggle to make a deal. Now we have an opportunity because of the NPLs. NPLs have collaterals. Some of them are investment-grade collaterals. So this time, for the foreseeable future, for, I don't know, 3 to 5 years, maybe more than that, we'll have an additional, you see, amount of supply that will come in the market for the first time. And this provides another very good opportunity for, you see, investors like us, for REITs and for other real estate investors, to invest in the country and make very good returns. So there are all the ingredients in place for the next years at least to have, you see, a very good investment environment that we had not in the past. So I hope that this will be the case.
It's reversed a little the pessimism with optimism.
Yes.
And I tend to agree. George, you have pretty outspoken and active investors, international investors into your company. One, what are their views of the current environment? I know they've went through a lot. Number two, expanding on what Iris just said, I mean, there is an opportunity, and the previous panel emphasized that through non-performance, the banks are really in a bind since it's very difficult for them to manage the massive real estate holdings that they have or could have. And do you see opportunity there as well?
Yes, going for the first part of your question, indeed, at Grivalia we're very fortunate to have high quality and long-term shareholders. We don't view them as just shareholders, we view them as partners and friends. And as we speak, Grivalia is a Greek REIT, but more than 75% is controlled by top institutional investors, mainly from the US and Canada. These investors came to Greece, came to invest in Grivalia because they have a long-term view. They realized that the pricing that was offered a few years ago was a heavily discounted price. As Iris mentioned, they weren't predicting what has happened with the taxation. Taxation last year increased by 600%. They have never experienced this type of an event in their life, and they have been investing for many years. So they haven't seen that happening again. So we are trying to convince the government and the political parties that they have to revisit the issue, because it's quite important to convince the international community, the investment community, that there is predictability and there is stability in Greece. Having said that, our shareholders are all happy with the performance we have all these years. They are very happy with the way we're growing the company. They are fully supporting us. And I think there are shareholders that are going to remain with us for many years to come. Now, going into the NPL story, indeed, this is a great opportunity for whoever wants to invest in Greece. A big number of real estate collateral is there in the banks. Obviously, for many years, the banks didn't have the framework, the legal framework. In some cases, they didn't have the wish to offload some of these problematic loans. I think now the time has come. as you are all aware, the banks have another round of stress tests that are going to be happening in 2018. Have already started and going to be more intense towards the end of the year. Not an EQR, but stress tests. What the Central Bank of Europe wants to see is improvement in the management of the NPLs. So this is a big incentive and a big thing for the banks, and I think that the next period of time, we're going to see some transactions happening. The REITs are a little bit restricted because we are not allowed to buy loans, so we are not allowed to buy the NPLs. We're only allowed to buy the underlying collateral from the banks. So either we have to wait for the banks to repossess the asset and then we can transact together, or then we have to find a partner that is going to buy the loan, and he is going to be willing to partner up with us to do a transaction for the underlying asset. So all of you that you are out there here in New York and you're looking into that kind of play, you can contact us, Aris, Odysseus, because we're interested to participate in that game.
And can you expand a little bit on the impact that this will have on Lambda? What does it mean for Lambda?
Jokingly, I would say this is $1 million question when this is going to start, but this is a joke. I think that we have seen signs of advancement in the last month, especially. I remind you that the project was supposed to start last November of 2016. It didn't. And now I will describe you the two main milestones that need to be completed for the project to start and give you a guess on what we think is going to be that date. The first milestone is for the master plan and the associated studies, environmental studies and technical studies, to get the green light from the High Court. I see many Greeks here, Συμβούλιο Επικρατείας. According to the time plan agreed between the government and Europe, the deadline for this is sometime at the end of the year, December. So this is milestone number one. Milestone number two is the completion of a tender, the successful completion of a casino tender. So we're going to organize a tender that is separate than the Ελληνικό. That means that the revenues of this tender are going to go to the state. It's an independent tender. That's why this is going to happen. We hope, and we have seen some interest from foreign players, especially from the US. And when these two milestones take place, if we assume that this is going to be sometime beginning of 2008, we can hope that spring of 2008 is going to see the beginning of works. Now, this is a very big project, not only because it's an 8 billion euros project, which by itself classifies it as one of the biggest urban regeneration projects in the world, but also because of its diversity. That means you don't have 8 billion euros being put in office buildings or in retail or in one of the above. It has a lot of infrastructure. It has telecommunication infrastructure, fiber optics, waste management, water management, a park. It has a theme park. It has all kinds of leisure entertainment. It's going to have the first integrated casino, convention, exhibition resort in Europe, not in Greece, in Europe. So you name it. And also, not only because of this and the multiplier effect that comes with it, we're going to talk about a game changer in the economy, but at the same time, it's a national project because it doesn't create competition between the domestic players and foreign players. You don't have one construction company benefiting from the other, or one cement company. I see there tags from Titan been here. I mean, there's not enough cement in Greece, there is not enough steel in Greece, there is not, or we talk about real estate development companies. For example, the office sector is going to be 3 million square feet. So you imagine the 300,000 square meters. So you imagine the opportunity for Rivale and Pancia, for a retail sector, is going to be an investment of 800 million euros. So anywhere you look at it, it's a big, big opportunity for the country to go a different route. We're not talking about Lambda here. We're not talking about Athens. We're not talking about the region. We are talking about Greece. And we're not talking real estate. We're talking about a milestone for the Greek economy. It's the benefit to all of us to make it happen yesterday. That's what I think about Ελληνικό.
Thank you, Odysseus. We hope the best, and we're very anxious to see it materialize. I think at this point we will open it up for questions. if anybody has.
Pretty loud. Odysseia, what you mentioned right there is what we call synergy. It's a synergy of office space, of entertainment, of retail, possibly some residential, I'm not sure, some casino, and it will succeed because there's synergy amongst those who will occupy the space, meaning they're going to spend money with each other within the same space, which is great, whether that's retail, you know, the people who work at the office will go to retail to shop, they'll go to the casino, and vice versa. Are we seeing this happening also in the business sector? Because here in the US, where the US has been very successful is, they have created synergy business parks, where we're not just talking about putting specific buildings for a specific need at this point, but we're talking about vertically all the industries taking care of each other within 10 miles of each other. Whether that has to do with the food industry, manufacturing, transportation is in there as well. That's very important for a foreign investor who's coming to Greece to know, you know, I have a guarantee about my raw materials vertically, and I also have a guarantee about the next phase, which is selling my product to somebody else who's going to manufacture something different. And if we have it all broken up all over Greece or all over the Balkans, it doesn't look as attractive to at least clients that I've talked to. Is there such a initiative in Greece to build synergy parks that have to do with the manufacturing, with the business sector?
Look, we cannot change the whole country with this project, right? The size of this project in terms of area is, yeah, thank you. In terms of size, first of all, we're talking about something like 2 times the size of Central Park. So, in this area, our vision is to make a place where you can, as we say, work, live, and play. So, within this area, you will have the opportunity to do all the things I described, and also with technologies and in an environment of the 21st century. Everything is going to be new. We have companies that have visited us, and they are talking about building a smart city, you know what this entails, with many online elements, with new infrastructure in everything. So, from this perspective, you have vertical integration and synergies between entertainment, between work, between residential, not in whole Greece, but at least in this one. The other element about Ellinikon is that, according to the estimates of our consultants, and they say this is a conservative estimate, we expect 1 million more tourists to come to Athens because of this project. Athens right now has about 2.3, 2.4 million international tourists, so you can imagine the effect not only in Athens, not only in Ellinikon, but in the areas around, and whatever these people bring with them. You know, I said before when we were talking about the retail environment that, and Greece, that we need to become more credible and we need to become more extrovert. To me, it's not, when we say extrovert to foreign capital, we're not talking only about money, but we're talking about the way of thinking. Things like what you described, this is what we need. We need to do hubs that can bring new technologies in Greece and young people and young brains in Greece. This is what we have to achieve if we want to change. Okay.
Thank you. Anyone else?
Thank you all for being here today with us. I think it was a very good session. And I cannot find a better way to close today's event than repeat what Mr. Athanasiou said. Ellinikon might be a milestone for Greece, but today we have to make things a milestone to increase the pie for the country. All of us working together to take advantage of this opportunity. Gentlemen, thank you very much today. Please allow me to thank our sponsors, Alpha Finance, Axia Ventures Group, Citigroup, the Eurobank Equities, LXM Group, NBG Securities, Piraeus Securities, Morgan Stanley, Danaos, Deloitte Solutions, Karajas and Partners, and Red Smith, Papapolitis and Papapolitis. Thank you very much, and having thanked you all, we need to take some credit ourselves for the organization, and that credit, of course, goes to the teams of ATHEX and AmCham that have worked long hours to make this happen. Mrs. Georgia Mourla, Mrs. Peggy Papastavru, Sofia Kronopoulou, Christina Kosma, Yannis Zalatolas, Stelios Konstantinou, Elias Spirtounias, and Angeliki Dikeoulia. Thank you very much. Now is the time. Now is the time for lunch.